And boom. Perfect. So, yo, what is up for y'all watching this on the YouTube replay? Hope you're having a great day, great Wednesday. Let me start off this with a quick portfolio update. I can't believe how good the market's doing. Right now, if we look at AMD, that's our top performer today. AMD is up 11 or basically 10% on the day. UiPath is up 3.4, Futu's up 4. So we have a lot of really good performers, but we also have some losers down here like Reddit, ClearSecure. I think the market just like went a little bit red. Let me verify this. Yeah, like we were just at an intraday high. Let me actually go down here and check this. Well, actually, no, it's just my portfolio. Because if we go look at the QQQ right now, this is really impressive. The QQQ is at an all-time high on the Qs. Hey, what up, Looney? Hope you're having a good day. YouTube's being really complicated right now because I have they changed how the stream works. There's like two different streams now. It looks weird. Anyway. Yeah, the QQQ is up one. Actually, the market's doing great today. Here's our portfolio. We have our main account here, and we also have a Roth IRA with Robinhood. So yeah, we're also seeing a little retrace right here. InnoData is having another phenomenal day. New all-time high on InnoData at $90 plus. I can't believe it. So that's a phenomenal day on InnoData. Here's my total percent change on every stock in here. Our newest position in here, Iron Mountain. It's one of my new favorite dividend growth REITs out there. That one's been doing pretty well. But dude, our Wix position has done terrible since we've started it. That's your Vibe coding play, which is starting to be more interesting after their acquisition. But yeah, Constellation Energy's having a phenomenal day. New all-time high on Constellation Energy. It's up 4%, but that is a new all-time high. What up, Benjamin Zerks? What up, Looney, Crispy? Sprouts Farmers Market. Hey, dude, I just made a whole YouTube video about Sprouts Farmers Market. I love that stock. We'll actually look at them. Hey, what up, Bob? Let's check this out here. So that's our Robinhood portfolio. Here's our Webull portfolio where AMD was up 10%, continuing the gains. You know, if y'all don't know, OpenAI took a 10% stake in AMD. So that's pretty interesting. And they're buying a bunch of AMD chips. So that'll pump up their orders, pump up the stock basically. And we're also at a new all-time high today in our Moomoo account right here. Let me actually check this out. In the past month, we're up 9%. Year to date, we're up 62%. You know, just in April, we were down, look at this, we were down 16%. You know, the S&P was only down 13. We were down worse than the S&P, but we've done a lot better as the market goes up. Why are we doing so good year to date? That's from Comfort Systems. They're at a new all-time high today, literally today. So, or pretty much right at it. So, that's been one of our better performers. Amphenol, also new all-time high today. We're now finally up 100% on Amphenol Group, which is pretty insane. So starting a weekly DCA in QQQM. Let's do QQQM. Actually, this is one of my favorite ETFs right here. I would absolutely, you know, not financial advice if you're like, you're 10 years away from retirement or something. This is a great ETF to own, like perfect. I mean, almost better than the S&P 500 because it CAGRs. Like S&P will probably return 8% a year, 8 to 10. Well, maybe the QQQ does 10 to 12 or something. I don't know because it's a little bit more tech heavy. But here's what it owns, you know, NVIDIA, Microsoft, Apple, Broadcom, Amazon, Meta, Google, like all stocks I would happily own individually, and I own a lot of those individually. What apps do you use? Yeah, hey, if you want to get any of these apps I'm on, they're in the link tree in my bio. This one I'm on right here is the first link. Yeah, I have a bunch of brokerages here, but yeah, my favorite one that I use is this orange one, Moomoo. Link tree in bio, very first link. Hey, what up, Bullish? I see Nathan. I joined. Hey, what up, Bullish? I appreciate that, man. So Sprouts Farmers Market, this is one that I just made a YouTube video about, so I'll keep it a little bit quick. But this is Sprouts Farmers Market. If you're looking for maybe a new stock to buy or put on your watch list, not financial advice, I'd maybe put Sprouts Farmers Market on there. Hey, what up, William? But if you look at the market right now, the QQQs, they're pretty much at an all-time high today. Well, this one is well off all-time highs, so it just feels psychologically better to buy it. Again, I'm a fan of if you're going to buy a stock on a dip, you know, buy one that has good quality fundamentals so you have a real thesis. Don't buy a stock that's on a dip with terrible fundamentals. And this is why I'm not just recommending this stock because they're on a dip. I'm recommending Sprouts Farmers Market because they have amazing fundamentals. Let me go analyze them over here. This is a grocery store, by the way. If you've never heard of Sprouts Farmers Market, they're like a healthy grocery store, and that's how they have so much pricing power. So what you focus on for grocery stores is their net margin. You look at Kroger, they're lucky to have a 2% margin. Costco has on average 3% net margin. Well, look at how they've expanded their margins the past year. Insane, 6%, 8%. Great news. The revenue's really growthy. Revenue's up 17 and the net income is up by 40 after. So that's the crazy part. Again, the margin expansion. And also they pay no dividends. They have no debt at all. they have like capital lease obligations, but no actual debt. But since they have no debt, they just spend so much money on share buybacks. Did you know that they've literally bought back 25% of all the shares just since 2019? So that's why I'm a fan of Sprouts Farmers Market. I wouldn't have it as, a huge position. But it's a nice grocery store with nice fundamentals. Now, I will say, here's some downside news I'll cover. Like, this is kind of the same with Target. They have no online presence, I believe. Like with Walmart, you can get your stuff delivered to you. Maybe they're just being out innovated, but I don't really think they're targeting the same customers like Walmart and Kroger because they're really healthy oriented, low ingredient kind of stuff like that. Anyway, that might be bias. I own them, but I'm down 22% on them. So, hey, what up? What do you think of the overall market state? Do you think stocks are overvalued? I do think, for the most part, most stocks are overvalued. Like if I go over here, I wouldn't, like all these stocks are trading at like 50 plus times next year's net income. Like AMD, Robinhood, SoFi, Super Micro. So some are at good, reasonable valuations like Progressive, Calm, Tap, Sprouts Farmers Market. But it's like a mixed bag. You got to pick and choose. But for the most part, I would say if you're looking to get into the market, I wouldn't really recommend buying, the QQQ. If you plan to never sell it, it's worth it, but it's tough putting meaningful amounts of money in QQQ. That's why I'm a little bit more cash heavy than normal. Right now in this market, I wouldn't recommend you sell anything. Don't trim or sell anything because that hasn't been the move before today. Just whenever you get paid next month and go to deposit that money, just don't deposit it. Keep a little bit more in cash than you normally would. Hey, what up, William? Good to see you. And that's what I'm doing right now. If you look in the middle of my screen, I got 1,100 of cash, and I don't really mind it. It still earns me 3.85% a year, or APY. Basically, Hood keeps flying, yo. Hood is on fire. Hey, what up, PW Physics? What do you think about silver? So I don't love silver, to be honest with you. If I'm going to pick a precious metal, I would rather pick gold, just because silver is really tiny. But that being said, look how great it's done. It's done pretty much just as good as gold. But did you know, here's a little fun fact. All the silver in the world, like if you had all the silver in the world, the whole market cap of silver, and you combine all of that with the market cap of all the copper, all silver and copper combined are still worth less than Google. Like the market isn't that big for silver. Did y'all know that? Like the market cap of silver isn't huge. It's a little less than Amazon. But yo, karaoke. But anyway, silver's done great. I like gold. Gold is worth 25 trillion, the most valuable asset in the world. Then it's like Nvidia at 4.5 trillion. But okay, what app are you looking at? Yeah, hey, what up, Richard? If you want to get this app I'm on, it's in the link tree in my bio, the first link there. And yo, karaoke, shout out to him with all the donations yesterday. He said, can we look at IONQ? This is one of the more better quantum stocks because they actually just did something very smart that none of the other names are doing right now. So, they did another acquisition. So IONQ acquires Vector Atomic. That's pretty cool. And just a couple weeks ago, they bought another company for $1 billion. I'm not sure how much they just bought this most recent company for, but here's the thing. It was so genius. They diluted the shareholder for $1 billion. It was right back here. They diluted the shareholder by $1 billion. But they bought a company for $1 billion. And that was a good use of money. Because if we look at their numbers right now, they're not great. 20 million for what's the market cap? $22 billion. But basically, I love that they just acquired a new asset. Also, Amazon's a shareholder. Amazon owns over like 100 million of this stock. So I kind of have some exposure, but I'm not too enthusiastic about this market cap right here. Yeah, hey, Kata, if you want to get this app, I'm on it. It's actually in the description of the YouTube stream. But if you're on TikTok, it's in the link tree in my bio, but it's in the link tree in the description. This is a brokerage, by the way. It's where you buy stocks on. Yo, karaoke, no way with the Night Star. If you got another stock you want me to look at, let me know. So IONQ, it is tough to buy right here, but I love that they're doing acquisitions, and they just did another acquisition, Vector Atomic. It looks like another quantum deal. They have 75 employees with 1,000x GPS accurate improvements. It brings gravity, airborne checks, space-ready gyros with 29 patents. Check that out. So they just bought a company with 29 patents with over 200 million in U.S. government contracts. Now that, it must have actually been a pretty meaning-sized position if they have over 200 million in government contracts. Anywho, I think out of all the quantum stocks, this is one of the better ones. You look at QBTS. or like D way or no the other QUBT. I think QUBT. I think they're also at all time highs. Like look at this quantum computing. Like would I rather buy IONQ at all time highs or QUBT quantum computing at all time highs? The other one, because if we go to QUBT's revenue, the revenue is 60,000. I mean it's down 66% year over year. So I just trust that other one more. Anyway, thanks again for that, Cherokee. No way, yo. Shout out to the homie Bob, Bob G on the YouTube stream with the super chat. Hey, I really appreciate you, my friend. Thank you so much. All right, let's see. Hey, what up, JC? I didn't know that. Wanted to stock up on precious metals. I really like gold, but I don't see gold and silver outperforming, tech heavy S&P 500. Gold and silver also don't give you a yield. That's kind of what's cool about the S&P 500. You get 1% of your money back in a dividend, tax free, basically. So, hey, what up, Prime? And thanks again. So here is Bobby said, well, GLD continues strong. Let's check it out right here. So GLD is literally the gold ETF. What's the expense ratio on this one? This one has a 0.4% expense ratio. Another ETF that's the exact same thing as IAU. And the expense ratio is 0.25. So maybe I just saved you 0.25% in expense ratios, Bobby. Hopefully that's worth the $5. But check this out. Let me actually add GLD just to prove that. So GLD and IAU are the exact same ETF, but as you can see, but one has a 0.2. Look, the returns are literally identical, like negligible differences. But yeah, exact same ETF. But this is literally just the commodity of gold in an ETF. So whatever gold does, both of these ETFs follow it. So pretty much no matter which one you buy, it's good. But IAU saves you 25 bips. Basically, for every $1,000 you put in, you save $25 or $15 in yearly expense ratio fees by buying IAU. But yeah, anyway, gold's at all-time highs. I don't love this risk to reward buying it now, but congrats if you own gold before today. I mean, it just continues to climb higher. I mean, maybe this is signaling something. It's a nice safe haven asset. Ooh, I got a Celsius right here. Yo, Bob, if you got another stock you want me to look at, let me know, because I'm not a gold expert at all. So SUPX. Hey, what up, Pumpkin? So SUPX. This is Super X AI technology. Let's do it. So a $2 billion company. The momentum has really been in their favor, and I'm not seeing any earnings reports. Did they? Okay, so this doesn't look good. These declines, revenue's down 55, down 52, and they're losing money. So, and there's no analyst projections or expectations at all. So, I wouldn't touch this one just because I don't know. SuperX launches the latest AI server. Blackwell Ultra delivers 50% more over Blackwell. Anyway, the momentum's really been strong. Celsius stock, I should be looking at Celsius. My brother gave me the Celsius. I haven't had a Celsius in so long, but I have had a Monster a while back. But anyway, here's Celsius. Celsius. Who they just bought? They just bought Alani. If you've heard of Alani before, it's like another energy drink. Alani owns 8.7% of the shares, but that explains why the assets just jumped up. If you look now from the previous quarter, assets went from 1.8 to 3.8. Why? Because the acquisition just went through. That also explains why the sales are up 82% year over year. Like the growth is finally back on Celsius, and they can trust that. They also, which isn't even included yet because this just happened, Pepsi just bought, you know how Alani owns 8%? Pepsi just bought 8% of the company and gave Celsius Rockstar Energy as well. So if that's like a not too popular one anymore. If you heard of Rockstar Energy, Pepsi owns that and they're giving that to Celsius. So that should bring even more growth. And Pepsi's also doing distribution and helping Celsius with that to save on margins. So I do like Celsius. The growth is back, but I don't know if I buy them here. Okay, I do. Alani's a really popular brand. So, hey, what up, Prime? He said AVPT. Yeah, this is one of those companies that just deserve to be at all-time highs. What up, Celebrate? GRRR. Oh, that's Gorilla. They have that AI data center contract in South Asia. Hey, what up, Sounds? We'll look at Neo. What up, Gary? Luke? What's up? And VTish. So here's AvePoint. Again, Hey, well, look at Duolingo. Remind me to look at Duolingo. Someone said difference between Coca-Cola and COKE. That's the bottling company, COKE. Remind me to go over that if you want me to learn more. But two completely different companies. But here's Ave Point, a $3.2 billion company. Let me go look at their numbers right here. So this is what I like to see. Revenue's up 30, after it grew 20, after it grew 15. So like the growth rate is growing for the company. And, they're not just growing revenue, but they're finally making profits now. 3 million this quarter, 3 million last quarter. Like I like that it's net income positive. Also, look at this. Their assets are growing, but the liabilities are staying flat. So their asset to liability ratio is going down. So basically they're deleveraging. Everything here fundamentally is headed in the right direction. If we look at the orange line, which is what the analyst expected, every quarter they're beating on expectations. They beat on net income, beat on EBITDA by a good chunk. So I think they're still expensive. Maybe that's why they're kind of just having a little healthy RSI retrace. But I really like this one long term. Maybe they're on my watch list as well. They did impress me. So Neo right here, I don't love this one just because it's such a capital intensive business and they're kind of nowhere near profitability, I believe. Or maybe I'm thinking of Xpeng. Nope, it's Neo. Actually, Xpeng's the one I like. You know what? Between Xpeng and Neo, I'd go with Xpeng. But check this out right here. This is the one reason I just stay away from this stock. I mean, last quarter, the liabilities were the same as the assets. The only reason they basically diluted, they diluted the shareholder to bail them out, kind of, but because they lose 600 to 700 million in net income a quarter. Like it's tough. They lose money on every vehicle they sell. And this is in USD. Again, this is a Chinese company, so we've converted it from Chinese yuan to USD. They lost 1 billion last quarter and $1 billion the quarter before. And what's the whole market cap? 19 billion. So again, there's a lot of momentum right now just because I believe there's a lot of new orders. They had some really strong orders. Check that out right here. This is the good news. Neo delivered 87,000 vehicles, marking a 41% year-over-year increase. That's great news, but I don't love the margins. Ooh, and this could also, again, they're Chinese. It looks like Neo and LI Auto offer tax benefit guarantees, or I don't know, something like that. Hey, yo, no way. Shout out to Maddie for the 25 Ron. Dude, he said with coffee time. Yo, today, Maddie, I got a Celsius right here. That's my source of caffeine today. I only got like 6 hours of sleep. He just said your Discord link is expired. I don't think so. Hey, Kate, are you talking about on my Ko-Fi? Because I don't have a Discord link. I don't have a public Discord. So what up, Gary? He said SNGX. Again, shout out to Maddie. If you got a stock you want me to look at, let me know. We'll check that one out. What up, Gym Therapy? Dutch Bros is gonna. Dutch Bros is. I do like that one a lot more than Starbucks for sure. So here's SNGX. We don't really cover these kind of stocks on the channel. I'll be super quick about this one because if you look in the top right, the market cap, this whole entire company is worth $17 million and they're at all-time low while the market's at all-time highs. That means that there's pretty much nothing of interest here to investors. Let's see, revenue. They're a revenue-less company. This was in 2024 Q2. They did 2,000 revenue before they went revenue-less. And whenever there's zero revenue, it stops reporting it. So we can just see that right here. They're a revenue-less, basically startup. They don't sell any product or service. They lose millions a quarter. Again, $17 million company, no sales, losing a couple million in net income a quarter. And look at that. When you lose net income, that money has to come from somewhere, so it goes down every quarter. So normally, you can understand why a stock is at all-time low is just by looking at their numbers. Like, it makes sense. Like, it is after you look at the numbers, you got to ask yourself, do I really want to trust my money in a stock like this? And I'm going to show you another one. If you like buying stocks on a dip, you like buying stocks. Like if you scroll out, like, hey, it's at an all-time low, that means it'll go up because of RSI retrace. But historically, these kind of stocks or these kind of fundamentals continue to hit new and new all-time lows. Actually, here's a fun fact. Stocks that hit a new 52-week high or all-time high, statistically, it's followed by a cluster of new all-time highs the following days. But it's also true in the opposite direction. When a stock hits a new 52-week low, statistically, the numbers show it's followed by a cluster of newer and newer all-time lows. It's what they don't want to tell you. Hey, massed production, no way. He said FLNG stock. Hey, thanks again for the roast there. I do appreciate that. Then we'll get to Core even up 7% today. Hey, that's awesome, Looney. What's up, man? Timothy said SoFi. Yo, we got to get to SoFi. Hey, Steph, thanks so much. said hit the like. It helps out the video. It does help. It does help out. Yo, if you want to hit the like button, hit the follow button. I really do appreciate that. That's the best way to support me because, by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you, DM you. All I have is a YouTube channel. Best way to support me is just follow my YouTube channel. Hey, try not to spam there. Hold on there. Yep, don't spam in the chat. I'll try and get to all the stocks here. But here's FLNG, a $1.3 billion company. Let's go figure out what they do. So all the revenue comes from Norway. So do beware, this is a Norway company. They might be a shipping company. Oh, it's an LNG company, oil and gas midstream company. So let's see. Revenue's up 1.5. So I don't expect these kind of, again, oil and gas industry, you don't expect the oil and gas commodity to outperform the tech-heavy S&P. Do you get a yield with them? That's the value here. See, like I thought, look at that. You get a 12% yield. Not too sure how sustainable it is. Let's go do the math and see how sustainable it is. So net income this quarter was 17 million. Okay, let's see. 17 million, let's just say they make 20 mil of net income a quarter. And the dividend cost exactly, so here's the bad news. The dividend cost exactly 40 million in net income a quarter. So here's what I'd be careful just because the net income isn't over 40 million and the cash flow didn't hit that either. The dividend's a little at risk. Maybe they need a little healthy dividend cut, but you're basically buying that to maximize your income. Maybe get a little exposure to oil and gas. And they're a Norway company too, so hey, you get exposure to that country. What's your take on AMD? Yo, yeah, hey, let's go check out AMD. I do own that one today. Today, they continue to go up another 10%. I don't believe it. I got 11 shares of this one. It's been a great hold. We didn't even time the bottom on this one. The bottom was $76, and we bought it over here at, 124. I didn't feel great about buying it, but now I feel great about buying on it. But yeah, AMD's done fantastic. If you're wondering what happened, OpenAI took a 10% stake in AMD. AMD's getting a bunch of orders from them now. And here's kind of where the circle kind of circles. Here's a little where it gets a little bubbly. So I'll be so quick about this. But basically, OpenAI now owns 10% of AMD. NVIDIA has a $100 billion stake in OpenAI. So literally, NVIDIA's stock benefits from AMD going up because when OpenAI places a bunch of orders with AMD, that sends AMD stock up, their EPS up, but OpenAI also owns 10% of AMD. So whenever AMD goes up, OpenAI goes up. And NVIDIA has a stake in OpenAI, so they go up too. Crazy. Sorry, I kind of worded that weird. But yeah, I wouldn't buy AMD now, but the sentiment is definitely in their favor. Blink charging. No, hey, RIP that company. What's their ticker symbol? Didn't they delist it to a 5-letter ticker symbol or okay, Lee said MSB. Ooh, we got to get to SoFi too. I can't hey, let me know which one you're talking about. Is it Masabi Trust? $400 million market cap, or is it that other company? I don't you get a 3.4% yield, dividend changes every year. Iron ore mining, so that's an iron stock. Okay, Himothy said SoFi. I want to get to SoFi. This is another one of my best performers. Ooh, Super Microcomputer. Yo, I do like Super Microcomputer. So this is a stock that I believe deserves to be at all-time highs or this new 52-week high level because of their good fundamentals that justify it. Here's what I mean. A lot of stocks right now, like Oklo, are just propped up on momentum. They're at all-time highs and they're a revenue-less company. But SoFi should be at all-time highs because they've definitely beaten expectations. What happens is, hey, if you want to get this app I'm on, it's in the link tree in my bio, but the first link there. But look at SoFi right here. They're specifically their financial services. This revenue's up 105% after it grew 80, after it grew 222, after it grew another 80. The growth is insane. I didn't even expect that. Analysts didn't expect that. If we go to the analyst expectations, which is this orange line, every quarter they're beating on revenue expectations. Every quarter they're beating on EPS, which is net income. Every quarter they're beating by a huge margin on EBITDA. So that's why I really think people are starting to take SoFi serious. They did 850 mil of revenue and 100 mil of net income. I wouldn't call it a bubble. Oh, hey, it does seem a little bit bubbly, but here, speaking back to the NVIDIA, OpenAI, AMD stake thing, we could be in a bull market till the end of the decade. I mean, this is why I'm not trimming or selling anything. Right now, if you own stocks, not financial advice, of course, I really wouldn't recommend selling or trimming your positions. Just whenever you go to deposit money next month, just don't deposit this month. Keep a little bit more cash than normal. What's the app? Hey, by the way, this is where you buy stocks on. It's called a brokerage. If you want to get it, it's in the link tree in my bio. First link there. It's my favorite one. Not sure which one you're talking about. I have all the brokerages linked up there. I got my Webull and Robinhood. I love all these. Look at our Robinhood's down 0.65. We got Google, Meta, McDonald's in there. We got a lot of stocks. I got too many stocks, but I love stock picking. I really do. Do you believe in software or future? I believe in certain sectors of software. Adobe. The reason Adobe, Salesforce are trading down is because they think AI might replace them in 10 years or come for a significant part of their business model. One great example of that is DocuSign, low moat, no moat DocuSign that I own, by the way. So OpenAI literally just created this product. I kid you not, just last week. Let's see if we can find it in the news. OpenAI launches DocuGPT. Enters document management market. I kid you not. OpenAI does exactly now what DocuSign does. So some of these software names might just get out innovated. So I think there's really a spotlight on DocuSign's management to innovate here. So I am maybe even considering selling out of my DocuSign. But one part of software that I think is immune, that I think is worth owning, is cybersecurity. Stocks like and again, they're definitely not traded off because, again, they don't. The investors don't see AI hurting them. They actually see them benefiting from AI because as AI gets better, hackers will use AI to hack. And with cybersecurity is something we'll always need, and this is a subscription model company. Here's one of my favorite cybersecurity names. It's PANW, Palo Alto Networks. 55% of the revenues are subscription model. And this is what you want to see for a growth stock to trust. I mean, every year their annual revenue just hits a new record, and they're not just making revenue, but they're also making hundreds of millions in net income every quarter. So yeah, let's get back to Duolingo. Speaking of another software name kind of being hurt by the AI thesis. Hey, what up, Two Trick, JD, No Bars? Yo, we'll try and get to all these stocks here. Hey, what up, Whispers? Hope y'all are having a great Wednesday. So Duolingo is another one that I love. This software name. This is actually one of my favorite software names that it's being hurt by the AI thesis, but it's worth looking into. It's actually they're up 8% today. Let's go. So Duolingo, it's that language learning app. OpenAI also has a language learning app competitor that's free. With Duolingo, you have to pay for their subscription. I love their business model. They're a subscription model company. Check this out. 83% of the revenue is all their subscription revenue. And check out how growthy it is. This is like AI hasn't hurt them yet. These numbers aren't showing any weakness from AI. The revenues of their subscription is up 46 after it grew 51, after it grew 50. These growth rates are unbelievable. I don't see many stocks with this consistent growth. It's rare. So they're like a hidden gem, I think. And if you don't pay for their subscription, you're seeing ads on their platform. And if we go to their advertising revenue, that's actually up 55% year over year. So anyway, both segments are growing. They're beating on expectations. Check that out. Analysts expected 240. Orange line's what analysts expect. Beat every quarter on revenue. Huge beat on EPS, which is net income, and a huge beat on EBITDA. Highest net margin ever. Expanding margins, most profitable they've ever been. Highest sales ever. Oh, they deleveraged the balance sheet. If you're wondering why did the assets fall, again, if you're paying off debt, you're paying off debt with assets, with cash. So assets go down with liabilities. Don't worry about it. You always focus on the leverage ratio. The asset to liability ratio went from 65 to 36. Everything in Duolingo fundamentally is headed in the right direction. And until that really stops, this one's a buy. They're not being hurt by AI, at least not yet. But I do really like that business model. So, okay. Raphael, what up, dude? Good to see ya. CGC stock just subscribed. Hey, thanks, Whisper. I appreciate that. Canopy Growth. So here's this might be a leaf stock. I can't really talk about this sector, but dang, it's at an all-time low right now. They're only worth $400 million. Oh, they're a Canadian stock. So we'll convert their currency from Canadian to USD just for, oh yeah, so if you look really quick, that's what they sell. I really can't cover this, but this is an industry I just stay away from. Again, the whole company was worth $300 million. They lost $30 million just this quarter. That's 10% of the entire company. That's just this quarter. This was a good quarter because the previous quarter, they lost $150 million. That's actually pretty devastating. And, they've just, if you average it out here, they're losing like 60 mil a quarter just for the past couple years. And 60 million a quarter when the whole company's worth 393 million, I can totally understand why this stock is at all-time low. And sadly, it could continue to keep hitting new all-time lows. There's a percent chance of bankruptcy there. So with that kind of risk, I'd be so careful. I just don't like that industry, but there is some good sentiment. I know a lot of the industry stocks have been momentuming higher a little bit right here. So hey, um, you almost have enough stocks to start an ETF. Yeah, we're bigger than the Dow 30. We're almost at the QQQ, the Nasdaq 100. So all right, TIGR, was that Tiger? TIGR. Yo, what up? Well, GMET, please. All right, we'll look at GMET. Oh, this is Uptech Fintech. I think this is like that Dave competitor. Yeah, I actually really like this stock. They're on my watch list. I put it on my watch list for a reason because I think this will this will impress you. So the metric you really focus on is their paying clients. The most recent quarter, their paying clients were 1.19 million. The same time last year, it was 0.98 million. So their paying clients grew 20% year over year. That's the valuable one. And that did wonders for their top line and bottom line. Revenues up 50, like the growth rates are nuts. That's what justifies this appreciation. They're like a mini Dave or a mini SEZL. So the revenue's up 58%. And the net income is up 1,400. Basically, the margins are nuts. I don't believe it. And this is real. This isn't propped up on some one-time adjustment. They really do have a 30% net margin. The PE is already cheap. It's a 15. The forward PE, I believe, is like a 12. So I really do like this one. Actually, let's see what the EPS projections are. Look at they they beat by double on the EPS projections. No wonder this stock is gapped up on earnings. So I do like that one. Yeah, thanks for reminding me of them, Lee. Really, like that one has good financials. All right, GMET, let's check it out. So this is the Van Eck Green Metals ETF. Okay, this is an ETF. So basically, that's just a basket of stocks. So it looks like a lot of international stocks. But this is a precious metal one. So it looks like it focus on, I see copper names in here. So I can't even view any of these. I can view this one, Freeport McMoran. But anyway, that's a precious metal stock. Anyway, I know silver and gold are doing great right now. Hey, what up, LMT? Good to see you. He said, check BTQ Tech Corp. What's this one? BTQ. Wait. BT Tech Corp. So, wait, there's a Canadian one and an American one. Let's check the American one. Oh, wow. Look at that. Is this one of the blank check companies? Wait. Of post-quantum encryption. Wow. Okay. Post-quantum. Okay. Let's see. Do they have sales, though? They might not have any revenue. So, yeah, the revenue this quarter was 48,000. What app is? Yeah. Hey, by the way, this is a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the first link there. But the revenue's down. They're losing net income. So, but there's some sort of good news I don't know. Like they gapped up like crazy. Maybe they acquired a company. Maybe they bought some crypto. I don't know. Maybe we can check the news here. Appoints 2 new executives. Looks like another quantum momentum name. I wish I'd give you more thoughts on them because right now they don't have any revenue. I would be very, very careful. Because yeah, that I wouldn't touch them certainly at this price. Hey, Jax Juno, I appreciate that. So, okay. APLD. Hey, you know who owns APLD? You know who found value in APLD? That was the homie NVIDIA. So if you go to the NVIDIA portfolio, I saw someone say CoreWeave earlier. Maybe we can get to CoreWeave too. Well, actually, let's just go over CoreWeave. We'll be quick. So CoreWeave, let's see. CoreWeave surges 9% on launch of serverless RL training for AI. Wow. CoreWeave CEO maintains $9 billion Core Z Scientific. Oh, so actually that's like them getting into crypto, which is really interesting. So there's just a lot of good news. Microsoft commits $33 billion to NeoCloud, including CoreWeave. Anyway, there's a lot of good sentiment heading in CoreWeave's favor. This is, like, in my opinion, a pure growth company. Check this out. This is my favorite part about them. If you look at the revenue's up, it's $1.2 billion, up from $400 million. That's a 3x increase. And, it was $1.2 billion, a record. The analysts are expecting in 2 quarters it to be $1.8 billion. So yeah, CoreWeave also just gotten a huge deal with APLD. I forgot to mention on CoreWeave, they lose a bunch of money. They lose like 200, 300 mil a quarter. So that's one thing I don't love. CoreWeave does burn a couple hundred mil a quarter, but analysts expect that. So it's not a huge headwind. But APLD is another company. This is a data center hosting company. Let me see. I used to break this down. Let me just scroll back here. Maybe I'll just go back further. Anyway, data center hosting company. And they're just, I wouldn't buy them here, but they're kind of just following the momentum. Let's see if there's any news down here. APLD secures 112 million from Macquarie and $5 billion AI infrastructure deal. APLD plans $3 billion AI data center campus in North Dakota. Well, there's some news for you. Can you trade gold in this app? Yeah, and you can trade the gold ticker symbol. And there's crypto on here too. You can do. Yeah. Hey, by the way, if you want to get this brokerage I'm on, it's where you get stocks, and you can do crypto and all that. It's in the link tree in my bio. First link there. It's my favorite one. All right. Buy CoreWeave. I wouldn't touch it here, but it's interesting. Can you scroll through your dividend drip transactions? I actually don't dividend reinvest. I reinvest it manually. I never withdraw the dividends to my bank account ever. I always rebuy it back. But here I can show you dividends right here. Here again, my dividends are so tiny. I mean, actually, these were all in September. Actually, I'm going to screenshot that. I might make a video about that. I got in September. I got 1, 2, 3, 4, 5, 6, 7 dividend payments in September. Pretty cool. Again, now my Meta $2. McDonald's is the big pair. McDonald's paid me $26 in dividends. Google $4, but it adds up, and you're not really expecting it either. This is actually our dividend only portfolio. If you look in the top left, every stock in here pays a dividend. Pretty interesting. Hendrik said Roblox. Yeah, let's do Roblox right here. Did you increase your position in Amazon? Not yet, Air. I do love Amazon though. Dang, they're up 1.7% on the day. Let's go. So actually going back to the watch lists over here, speaking of Roblox, Kathy Wood's been a big bull on Roblox right here. It's 5% of her portfolio. It's done very good. Check that out. But there's a few red flags in my opinion. There's good news and bad news. Let me share with you the good news that explains why the stock is doing so well. This is the metric you really want. Hey, Clips, I don't want to do that if that's all right. I'm not. If it's an IPO or something, I'm not going to speculate. But check out their active users right here. This is the reason. Their daily active users this quarter was 111 million. The same time last year, it was 79 million. That's a huge increase year over year. Hopefully it's not propped up on AI bots or something, but they've also just beat on revenue expectations. Analysts expected 1.27. They reported 1.43. But here's the one part that keeps me away from Roblox is just the fact that they burn through a lot of money. They have a bit of debt. They pretty much same amount of liabilities as assets, and you can't pay off debt if you lose 200 mil in net income a quarter. So we really want to see them narrow these losses. The losses went from they lost 200 mil last year, but they lost 280 mil this year. So we do want to see them narrow their losses. But I do like the growth of the revenue, and how their daily active users is growing. But don't love the debt and the net income losses. I usually, unless it's like a rare exception or a small position, I stay away from the profitless companies. I really do. Every stock in here is profitable, like by far. Every stock in here is super profitable. I don't know about all these. Well, actually, pretty much 90% of these are super profitable in terms of net income. Hey, what up, Johnny? Shout out to the member, Johnny. Okay. Yeah, hey, Lukey, AMD did go crazy. Look at that. Actually, they're retracing now, but they're up 9.12% right now. They've been an incredible performer for me. They're actually my largest holding now here in our portfolio. UiPath, we're still down bad on them. I woke up too early and came across this random live. Hey, what up, 20? Hey, by the way, if y'all want to hit the follow button, we stream every day around this exact same time. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Please watch out for people impersonating me. But yeah, can we go over Amazon? Let's do it. Oh, remind me to look at Eli Lilly. I want to get to all these. There's so many good stocks I want to look at here. Dang it. We're just going to kind of rapid fire through these. So let's go over Amazon real quick. This is like an ETF in one. If you have the intention like me to just buy and never sell, it's worth even buying right now. But there's so many businesses in one. Actually, let me show you how it's broken down. A lot of people know Amazon for their online stores, but that's only 40% of the revenue. Then they have their third party seller logistics, basically revenue where they manage your product for you. But the most valuable part of Amazon in terms of net margin brings the most to their bottom line is their AWS cloud business. Did you know they're the number one cloud service provider by market share? It's over 100 billion of annual revenue. It's their highest margin business. They're not making too much high margin shipping you that package 1 day delivery. But then they're an advertising play. Obviously, the Amazon Prime subscription, that's a good chunk of reoccurring revenue they get. They also have they're an advertising company as well, which is cool. There's ads on, they own Twitch, they own Prime Video, all that, and they have physical stores as well. This is literally an ETF in one. I kid you not. They're a UPS, a Walmart, an Oracle Cloud, an Instacart, a robotics company, a Rich Tech Robotics, all in one. I kid you not. And they're super profitable. Like, this is a must own for the long run. They're expanding margins. Look at the revenue, it's up 13, but net income's up by 35. Pretty cool. So Amazon is totally one I'd recommend to buy and never sell. Hey, what up, Isaiah? Good to see you, my friend. Hope you're having a great day. What app are you looking at? Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio. First link there. It's a software. It's where you buy stocks on. So let me pull up Eli Lilly right here. This is a healthcare company that I absolutely love. What up, Catherine? What up, Kevin? We'll try and get to qubits. I don't love qubits. They don't have any. They're basically they don't have too much revenue. But that one's a crazy momentum, though. Congrats if you're into quantum names, but I wouldn't recommend them here at this risk reward. But check out Eli Lilly. This is what's so fascinating. I don't think a lot of people know, but they sell a bunch of different prescriptions. Like they literally just create them out of nowhere and they just sell. Like their main prescription now it grew to their main prescription in terms of sales. It's a monster grower. Revenue's up 112 after it grew 217 after it grew 6,000. Like literally they created this not that long ago. In 2023 or 2022, it was 16 million of sales. Then it went to 180, and ever since then, it's now 3.8 billion a quarter. And at this growth rate, what's it going to be the same time next year? And not just that company, they're now getting into the weight loss prescriptions. If you're looking for a weight loss play, Eli Lilly is coming for Ozempic. They have Zepbound. Check this out right here. This is their weight loss prescription created in 2023. The growth is insane. 2.3 billion to a new record, and that's just their main two businesses. Then they have all these other prescriptions like Trulicity. Hey, no way. Actually, Trulicity's down 24%. Jardiance is up 50. But they're not just super, like this is a good growthy company in my opinion that's super profitable, 0.6% yield. Eli Lilly's a good pick. AbbVie's a good second pick. Yo, Isaiah, dude, thanks so much for the hand hearts, my friend. I really do appreciate that. Hope you're having a great day. If you got a stock you want me to look at, let me know. Wait, he said, do you think Intel's a good buy if they partnered with AMD? I don't know if Intel would partner with AMD, but that would be good for Intel. One thing I speculate on is, we just seen the government take a 10% stake in Intel. They basically made NVIDIA take a $5 billion or 5% stake into Intel, or I don't know if it was a 5% stake or if it was 5 billion, but NVIDIA took a stake. Basically, NVIDIA is now moving some of their, if you didn't know, NVIDIA just designs their chips. Taiwan Semiconductors in Taiwan actually manufactures all the chips for NVIDIA. And they're 6 feet away from China. We can't really defend that with the escalating tensions, the tariffs and everything. So NVIDIA is now moving some of their older series, 1080 series, some of their CPUs to Intel in the US. So we're bringing some of our manufacturing back to the US, which I think is a good move. It's going to be more expensive slightly, but it's the right thing to do. And I also think other companies will buy some Intel. I think Apple will. I think that might be the next one. Apple promised, I think, 300 billion investing in the US. One of the ways they could do that is by buying some Intel. It says AMD partners with OpenAI. Intel extends Ohio chip plant timeline for 2030. Pretty cool. Wait. Intel explores Foundry's partnership with AMD following NVIDIA investment. Oh, so that's what you're probably talking about. Okay, so yeah, NVIDIA did a $5 billion for a 4% stake. SoftBank did $2 billion. Intel in preliminary talks with AMD for potentially Foundry series, including... Okay, so anyway, there's a lot of bullish sentiment for Intel. It certainly had a nice rally. I wouldn't, put a lot of money into it because the risk to reward, like most of the rally has already happened, but the sentiment's good. It's in their favor. Hopefully they can get another 25 to 8% day like AMD has been doing. Yo, what up, Nathaniel? Hey, Nathaniel, good to see you, my friend. Hope you're having a great day. Um, hmm, let's see. REGCO. Hopefully I can find this one. He says RG has billions of assets and is making more money in operating. Let's see what this is. This looks like a bond. Uh, the preferred series. Yeah, I don't acquiring, developing, owning income producing retail real estate assets. So we go to the revenue here or just net income. Yeah, they're making a good 100 million in net income a quarter. Yeah, let's see here. He said he had a lot of cash. They have 150 million of cash. Let's see how much the dividend cost. Or do they pay a dividend? They do. So look at this. The dividend cost 131 million in net income. They can afford it on a cash from operations, which is probably what you want to look at, but they could not afford it in terms of net income. Maybe they don't pay a dividend. I don't know. I wish I could give you more thoughts on that. I don't really know too much about that. How many shares of Rocket Lab do you have? What up, Johnny? I actually do not own any Rocket Lab. Sadly. I wish I did. They're doing great, you know? So Jeff Mack, what up, dude? He said SUPX. This is, oh yeah, we were looking at this one earlier. I couldn't find any thoughts about, they don't report numbers. Like we couldn't get any numbers. Let's see, there's a little, I don't know if there's any news here. SuperX launches latest XN AI server, unveils modular AI factory solution to reshape AI infrastructure with estimated deployment cycle of under 6 months. So they announced some sort of new technology. I wish I could do more research on this one for you, because if we go to the revenue right now, it looks like a revenue-less startup. But maybe if they got some future orders or something, I would have to do some more news research. But you're really paying for the future here. Maybe it's really pricing in the future growth. So I would be careful with that one. Can you explain a stock split and how that works for your shares? Hey, Isaiah, dude, thanks so much for the rose there. So yeah, stock split is it doesn't change your money. So basically, if you have $1,000 in a stock, if you have $1,000 of stock and that's one share, and then they do a 10-for-1 stock split, you still have $1,000 the next day. But if they do a 10-for-1 stock split, you now just have 10 shares. So it never changes the amount of money that you have. It pretty much does nothing but change the amount of shares you have. It just slices up the pie into smaller pieces, but you still have the same amount of the pie. Like you like literally imagine a pizza. You take a slice of the pizza and then you just like slice your slice of pizza into more pieces. You still have the whole entire slice, just chopped up more. Still have the same ownership as the day before. Hopefully, that actually I didn't explain it too well, but hey, what up? Kevin said Netflix stock. Let's do it. Can you look at Okta? What up, Kyle? Hey, my college software uses Okta. Every time I load it up, like I did this morning, it said Okta in big letters in the bottom right. So hey, I'm supporting Okta. But hey, Cherokee, no way. Thanks for the TikTok hat. I do appreciate that. So let's check out Netflix right here. This one is there's been some Netflix reports 8.8% US TV market share. You guys won't believe this. You know who has a bigger market share than Netflix? Is actually YouTube TV. I believe YouTube TV has a 12% TV market share. YouTube TV about 2-3 years ago took over Netflix in total watch hours, which makes sense because it's free. But anyway, here's cool stats we get from them. 301 million premium subs. Their ARPU, basically average monthly revenue per paying membership, is $11.60. So they're making basically $11.60 per user per month. And I love these software names. Even in a recession, or they're collecting they're collecting your subscription money every month, and they just rose prices. They just introduced an ad subscription tier, and that ad subscription tier, they did it strategically where they wouldn't do it if it wouldn't make them more money than just their normal subscription. So they've been able to expand their margins. You won't believe this. Like fundamentally, Netflix is amazing, but the valuation's too high. But check this out. The revenue is up 16%, but the net income is up by 45%. They're easily making 2 to 3 billion net income every quarter, probably going to be making 3 billion plus of net income a quarter from now on. 28, 30% net margins. I really like Netflix. Same with free cash flow. They're printing 3 bill of free cash flow a quarter, but I wouldn't be jumping up and down on that valuation. Can you explain Webull? Can you check out Webull and explain the negative 2,500% of revenue? I don't know what you're talking about there, but here's Webull. This is that. Hey, thanks for all the roses there, Isaiah. I do appreciate that. The perfume. So here's Webull right here, though. This stock, their revenue actually grew year over year. So check this out. This is one thing I like about Webull. I have a Webull account right here. I've probably given them a lot of transaction fees. They also just brought crypto back to the platform, so that should bring them in some. There should be a nice earnings tailwind for them. But check that out. Revenue's up 46. They are losing net income, or they lost net income this quarter, but the last 2 quarters they did make net income. Maybe Webull can turn into like a Webull stock or a Futu type stock one day. My favorite brokerage stock right now in terms of valuation is FUTU, best brokerage out there. Or valuation wise, 20 times forward net income, you get a yearly special dividend, arguably better fundamentals than Robinhood stock. But I do own Robinhood as well. Robinhood's my best performing stock of all time. I do like that industry. Hey, thanks, Raphael. I appreciate that. Savi said AVAV. And what up, Mikey? Hope you're having a great day, my friend. So here's AVAV. This is Aero Environment. Wow, all-time high. So congrats if you own this stock. You got to be up on your position. Let's see what the numbers are. So autonomous systems. Well, we only get 1 quarter of data, but it's up 50% from this exact same time last year. They report in fiscal year. That's why it says 2026, but fiscal year, it doesn't matter. It's up 50% year over year, that business. And I like this industry, cyber, space, directed energy. Let me just go to revenue right here. So wow, hold on. So the revenue was 167. It's expected to be 503 million in 2 quarters. I bet they reported something this quarter and these got revised higher, so it didn't always look like that. So they must have had some really good guidance. Yeah, wow. The sales rocketed up. Look at their assets. They must have went through some sort of acquisition. Let's go check. If you go to their cash from investing activities, yep. So if this is negative, that means they bought a company. So they bought a company for $900 million. They probably issued debt. So let's see if you go to CFI or issued shares. Yep. So they issued some debt to get that. Normally you'll see that, but this is great. The growth is there. The growth is finally back with that new acquisition. It's probably a synergistic acquisition. Mikey said V&Q is good. Yeah, this is your real estate ETF. So if you're looking through all the REITs, like if you don't know which individual REIT to buy, like American Tower, Simon Property, Mall Group, Digital Realty, Realty Income, the triple net lease, Public Storage, the self-storage, Equinox, Prologis, the warehouse one, Welltower, the senior housing care one. I really like Welltower. They've had some really nice stock price appreciation as well. But yeah, this one just breaks it all up for you. You still get a 4% yield. Here's the thing: you're basically buying this for the income. You get 4% in dividends a year, and then you're hoping for like 2 to 3% in stock price appreciation on top of that, for hopefully a total return of like 7% a year. That being said, I do not expect this to total return outperform the tech-heavy S&P 500. Real estate isn't that growthy, but in a lower interest rate environment, that one should really benefit. OppFi here. What's OppFi? Let's check it out right here. Hey, thoughts on Broadcom? Hey, Nathaniel. Hey, remind me to look at Broadcom. Put that one in the chat again. So let's see. OppFi. Let's actually check out this one. I'm a little behind on the chat. Sorry, guys. I'm going quick here. Multiple streams. Be patient. Yeah. Hey, what up? Yeah, there's a little thing on YouTube now. For the first time ever, they changed the whole YouTube stream. So there's like 2 different streams. There's like a horizontal one and a vertical one on YouTube now. And they've like combined it. It was so complicated for me to get right to my YouTube channel. Follow my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Because I'm streaming on TikTok. We got 200 viewers on TikTok, but 40 on YouTube. So anyway, check out OppFi right here. I just appreciate if you watch the stream from YouTube. If you miss anything, you can replay it. Sometimes I talk too fast. Sorry, but $880 million market cap. The momentum has really been in their favor. Let's go see their earnings report. So the growth expectations are very good, and they're beating on expectations every quarter. Let's see down here. So revenue's up 12 after it grew 3. So it looks like the growth is coming back. Their net income positive. First off, that's actually great news. The fact that they're already profitable. The net income did fall. Oh, actually, no, it didn't. So you always got to combine or look at both numbers. You look at the net income and the operating profit. The operating profit is basically the underlying core operations, because there's all the time, you see this with Tesla and some other stocks, one-time adjustments that really make the net income inaccurate. So you always want to rhyme that, blend that in with the operating profit. This is basically the business's core operations without paying taxes or interest yet. So this they're basically before tax revenue, and it grew 25% year over year. So sales are up 12, profits are up 25. So they actually expanded margins. They should be making, hold on, like 60 mil in net income a quarter. They are trading at, it says they're trading at negative 7 PE. Wait, is that right? That's not possible unless they've diluted you. Whoa. Hold on here. The only way they could be net income positive but EPS negative is if they diluted the life out of you. That can't be true. I wish I could. I don't know. Sorry. Hey, what up, James? You said, which platform is this showing? Yeah, hey, by the way, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks on. It's my favorite one. Nathan, hey, what up, Charles? Hope you're having a great day. If you have time, MTY Food Group, let's do it. And hey, random guys, he said TEM stock. Let's do a Tempest AI stock as well. Let's see. ARKK. Oh, I want to look at ARKK. Wait. MTY Food Group. Okay, so this is a Canadian company. I know a lot of the food stocks are in trouble right now. You know, even to the restaurants like Wendy's, all-time low, Krispy Kreme, all-time low. But let's go. So this industry, I'll give them the benefit of the doubt because the industry is in a decline. But let's see what they're doing. Ooh, they're a franchise model. I love this. First off, let me just see. Is a franchisor in the quick service casual dining. So let's see. Their corporate-owned stores are 43% of the revenue. And look at how that just rocketed up in 2024, but probably just from opening new stores. But that's nice growth. And then they have the franchising revenue. This is the high-margin business, you know. Like at the McDonald's franchising model, if you go spend $100 at any McDonald's, $4 of it goes back to McDonald's as a royalty. So this, we'll go look at their margins after this. Processing, distribution of retail. Well, let's just see what they reported versus what analysts expect. So we only get revenue estimates. They missed on revenue slightly, which is all right. Yeah, so I kind of expected this. Revenue's down 0.4 after it fell 1. So they are just barely making a little bit of profit right here. So they're realistically making like 20 mil of net income a quarter. At least they're still net income positive. That's good. You get a nice yield, a 3% yield. Ooh, let's go see if that dividend's sustainable though. So if they're making, we'll give them the benefit out. If they're making 25 mil a quarter, they got some weird stuff. Oh, this is a Canadian company, so they actually report a little different. I forgot. Dividend costs $5 million. Actually, dividend's very safe. The dividend only cost $5 million of net income a quarter. So actually, I'm pleasantly surprised at how low the dividend cost versus the yield. Anyway, I'd still be careful with that one. Like Wendy's stock, for example. Check this out. RIP Wendy's, you know, same price as they were, because they were a franchise model, kind of like them. Wendy's is the same price as they were back in 2007. You know, check out Jack in the Box, RIP. Jack in the Box, all-time low, or pretty much 2004 low. Krispy Kreme, DNUT. Anyway. Let's see. Hey, what up, Sin City 72? Let's check this out. You should look at MCore EME. Hey, if you didn't know, EME is the pretty much exact same thing as Comfort Systems. Comfort Systems, I've looked at both of the. They do the more on-site modular reactors when actually Comfort Systems make them off-site for. But anyway, these stocks pretty much move identical, but Comfort Systems has really had that whenever they go up, as you can see, they really follow each other. But Comfort Systems has had that little bit better performance, and I'm glad I picked this one. But you're super happy even if you own EME, because they're also at all-time highs today. That's my best performing stock. Actually, I've never had a stock ever go over $10,000 before. And that happened today. That's incredible. We're actually at an all-time high in this account today. Can't believe it. Congrats if you own stocks. You know, let me actually go check the Qs right now. Let's see. QQQ, look at that. Qs are up 1% now. New intraday high right now. Let me check this portfolio. Are we at a new intraday high? Come on, Robin, I get out of here. And we're up 0.81. Still, McDonald's is holding us down. You know, when tech goes up, usually McDonald's doesn't. Google's down on the day. That's odd. when the Qs are up. Dude, Innodata's up 5. Okay. Anyway, let's get back here. Oh, hey, my foot said Palantir. You know what? We haven't looked at Palantir today. Let's do a quick analysis on Palantir. A cyclical energy just joined the S&P 500. Yo, Luke, what's the ticker symbol for that stock you were talking about there? Cyclical energy, or I don't know. Anyway, here's Palantir right here. This is a company I would love to get exposure to. I'm telling you, I want to own this stock eventually, but here's the thing. They traded an extremely high multiple, like one I can't pay. They traded 126 times sales, not 126 times PE or net income, but 126 times revenue. But here's why they definitely deserve a high premium. If we go to their government revenue right here, this is the best part. Let me get a sip of my Celsius here. Sorry. Okay, so sorry, I've been basically talking for an hour. I appreciate y'all being here. By the way, if you want to hit the follow button, we stream every day. By the way, I sell nothing. Someone said something about a WhatsApp. No, hey, but I have no WhatsApp, Telegram. I sell nothing. I have no course book. I'll never follow you, DM you. Watch out for people impersonating me. But look at the government revenue. Sorry, let's get back to this. Government revenue is booming. It's up 49%. After it grew 23, after it grew 15, the growth rate is growing. I can't believe it. The military, Air Force, a lot of police stations use their government software. ICE does, sadly, but also that's why you're actually being a little boycotter now, because Palantir is helping out ICE. But I don't even know if I can talk about that because I got banned last time. But anyway, commercial revenue. With basically their contracts with the S&P 500 companies, mom and pop shops, whatever, also super growthy. I mean, revenue's up 46 after it grew 32. I mean, insane growth there, beating on expectations every quarter. Their first ever $1 billion revenue quarter with $330 million net income. They're expanding margins, never had a 33% net margin before, completely debt-free stock. I mean, they literally have no debt whatsoever and $6 billion of cash. I mean, that's a huge safety net. Complete no debt on the books, $6 billion of cash. Cash is earning interest, and the cash from operations is insane. I mean, $500 million free cash flow, up 3x year over year. So Palantir's a beast, but valuation's too high. I want them, but not at this multiple. All right. Let's see. Thanks for looking into it. For other suggestions, I'm looking for struggling sectors that might bounce back. I own a lot of tech. Oh, hey, yeah. That's a good thing to swing trade, the sectors that are hit the most. So, all right. Innodata, please. All right, let's check out Innodata, because this one, I don't talk about this one much anymore because it's at a too unrealistic valuation. If y'all were on my streams a couple months ago, actually not even a couple months ago, 1 month ago, because that's when we were pumping this one. In just 1 month, it's up 83%. And that's why I haven't really talked about this stock ever. This is one of my favorite, small cap. We bought this one at all-time highs, and it just continues to go higher. We're up 175% on Innodata now. But yeah, here's what I love about this stock. And I hear they're an M&A target. They're worth $2.93 billion. That's why I think there's more upside. That's not the law of large numbers isn't hurting them. They're a $3 billion company. And check this out. They're a data labeling company. Their top customers, I kid you not, their main customer is Meta, then Google, Amazon, NVIDIA, and one other one, I forget. But anyway, the growth is insane. The revenue's up 99% after it grew 92. And they're beating on expectations. They did $58 million in revenue this quarter at a record. They're expecting $70 million in 2 quarters. They're also net income positive every quarter. So profitable company. Also FCF, that's what free cash flow stands for. Super free cash flow positive. They have no net debt, expanding their balance sheet. Asset to liability ratio is going down like crazy. Everything financially, sentiment wise, everything here is headed in the right direction, but the multiple is expensive. Probably definitely too expensive to pay here. Wouldn't touch it, really over $80 a share. Really wouldn't touch it. And it's like 92 right now. Someone told me to buy BEMP Kratos. Is that a smart move? Well, hey, MP. So I don't. Those are all right stocks. They're at a bit of a high multiple. Like Kratos, this is a government contract play. They actually just renegotiated higher prices with the government. So, if you look at a lot of the government defense names, I've just been mooning recently. But if we go to their Kratos Government Solutions, that revenue grew 29% year over year. But check out how much that beat expectations. That's why the stock is rallying so much. If you're ever wondering why is the stock at all-time highs, why are they going up so much? Usually it's explained by looking at their numbers. Like analysts expected 305 and they reported 350. And they're also net income positive every quarter. Multiples extremely stretched on Kratos, like more so than Palantir maybe. But I can see why, I can totally understand why they're doing so great. And like it also explains why Lucid's at all-time lows, the numbers. And it explains why SoFi and Robinhood are doing so great. How do you feel artificial intelligence stock tech due to? Yeah, there's no catalyst really stopping the rally to continue. Webull stock or Himothy, what up, dude? BULL. So, yeah, they're down 4% on the day. Isn't Robinhood green? Let me go check out the other brokerages real quick because I do on Robinhood. Robinhood is up 3.78% of the day, and Moomoo stock is up 4%. So, those are the way like fundamentally like 100 times better than Webull. But wow, the volume today! Look at that record volume ever. Were there some sort of news? I don't know. I don't know. Any intelligent comments in over here? Anyway, so Webull, I have the Webull app right here. I'm a user. It's to see at the top. It's called Webull. I've probably given them a lot of transaction fees, but they just IPO'd. I love the growth here. The sales are up 46% year over year, but they are still struggling, staying profitable. They lost 30 mil in net income right here, but they made net income the past 2 quarters. But they just introduced crypto. That could be a nice earnings tailwind for them. I wouldn't have them as a huge position, but if they pull it off right, they could be better than they could trade like a Robinhood one day. The reason Robinhood follows Bitcoin is because a lot of Robinhood's actual net income profit comes from crypto transaction fees because it's much more profitable than stock transaction fees and payment for order flow. So Robinhood used to trade like Bitcoin, but remember, Webull literally last month is when they just started doing crypto again. So they're just now getting back into that industry. So that could be a nice little boost up for the revenue. Do Uber stock. Ooh, hey, yeah, Uber. I love this company, by the way. Perfect buy and never sell stock. Someone said DoorDash. DoorDash is another one just like Uber. If I had to pick between DoorDash and Uber, though, I'd honestly go with Uber, but both are great. And they both have done phenomenal. I'm pretty sure they're both like at all-time highs or very close to it. Here's some of the stats for Uber. They have, let's see here, 180 million monthly active consumers. So that's the most important metric. The monthly active consumers was 180 million. This exact same time last year, it was 156 million. So that's a really nice increase. And hey, user 197, dude, oh my goodness, with the dog baseball. Oh man. User, if you got a stock you want me to look at, let me know. I really, really appreciate that, user 197. But check this out. A lot of people thought the growth of Uber would stop after 2020, like right after COVID, when people did Uber a lot, or they thought the growth would stop, but the growth just continues. The sales are on their mobility. It's up 18 after it grew 25, after it grew 37. And also the delivery business, which is Uber Eats, that business is up 25, also to a new record now. And they're not just growing their top line, but bottom line. The FCF, which stands for free cash flow, is insane. They're pretty much making 2 to 2.5 billion of free cash flow. These year-over-year growth rates are nuts, and not just revenue, and not just free cash flow, but GAAP net income. This one quarter, they didn't actually make 6.9 billion. They actually made like a 700 million. So the PE is a little bit artificially low. If you look at the PE right now, actually, it says 16. They're really trading at like 28 or maybe even, I don't know. This is a company you want exposure to. Incredible stock. And again, shout out to user 1977. I can't believe that gift there, dude, with the baseball. Wow. I really do appreciate that. Oh, yeah, we got to get to Broadcom right here. I'm so sorry, Nathaniel. Thanks for reminding me. So here's Broadcom right here. And hey, thanks. It's Sakima and Brown. Thank you very much for the roses there. Yeah, if you got any stocks you want me to look at, let me know. So here's Broadcom right here. This is like a competitor to Broadcom. OpenAI buys a bunch of NVIDIA chips, but Broadcom also sold a bunch of TPUs to OpenAI where they design the rest of the chip themselves. It's kind of like the toolkit. But anyway, Google's into TPUs as well, and Amazon. But Broadcom, check this one out. A lot of people know them for their semiconductor solutions, but recently a lot of the growth of the stock has come from their infrastructure software. The growth rates are insane. If we look at this in 2023, it wasn't even 2 billion a quarter, but check out how it rocketed up. And ever since then, the growth has just continued. Like the fact that they're holding on to, like the revenue's up 17% after it grew 199%. Like it's holding on to that gain. Like that's what's incredible about this stock. Where does the revenue come from? Do beware. Only 24% of this revenue comes from the US. China's 20, but they print money. If you go to the free cash flow, wow, $7 billion a quarter. Net income is $4 to $5 billion a quarter. Drink my water here. Oops. All right, sorry about that. Oh, Broadcom also has a very nice dividend yield. Sold down on no news. Good news for Archer and Joby. I saw some stock or some people talking about Archer. So Archer Aviation did some partnership with, I think, Tesla. Let me go to the weekly brief here. Okay, maybe that's not true. I don't know. But here's why I would personally stay away from Archer. Unless you plan to trade or swing trade this. I don't trust a stock that's a startup. So if we go to the revenue right here, again, it says no data because they've never sold anything. They've never sold a product or a service. So no sales. And if we go to the net income, they lost 200 mil this quarter, 100 mil last quarter, 200 mil. So these are the kind I stay away from. But that being said, the stock has done amazing nonetheless. And again, in this market, the quantum stocks, the revenue-less quantum stocks are going insane. The momentum stocks are momentuming, especially because the market's at all-time high. So this is the kind of time to be in these kind of stocks. They're also backed by Stellantis. Stellantis owns, Jeep and Dodge. Oh, and ARK. Kathy Wood owns some shares as well. So they are backed by some good people, but we really want to see them start really making some sales. It's just hard to trust a lot of money and, and it kind of hopium, no revenue, losing 200 mil a quarter, 100, 200 mil. Hey, what up, Mohammed? How's it going, man? We have not looked at this one. LAR stock. What is this one? Wait. Did I look at the right one? Because there's different ones here. Lithium Argentina. Okay, so a lot of the lithium stocks have been going nuts. Lithium America just went insane, but this is Lithium Argentina, so I'm guessing they have some lithium mines in Argentina if you go to their market. Actually, it says the revenue comes from the US. They don't have any sales, so it's just the asset they own. Looks like they have a good balance sheet, though. Looks like pretty much no net debt. But what we've seen is Lithium America, MP Materials. A lot of these stocks have been going up because we're trying to be more mineral independent. What's that app? Oh, yeah. Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. This is a software where you buy stocks on. I love it. So how does VNQ compare to VYM in terms of dividends? Oh, wait, VYM has not even close to the yield, right? Or Vanguard high dividend yield. Yeah, this one has half the yield, a 2.5% yield, but this one has way outperformed in terms of stock price appreciation. Check this out, actually. So here's why you're buying VNQ to really maximize your income. You're not buying it to outperform in the long run, but we can kind of see the difference, the real estate versus VGT the past couple months here. Like even though you got an extra 2 to 3% in dividends, you would have made 10% more being more growthy, especially in this market. So that's what I'm saying. If you're 10 years away from retirement, I wouldn't put a bunch of money in the higher yielding stuff. Hey, SL, what up, dude? Thanks for the rose there. Appreciate that. All right. So thoughts on Coney? Yeah, Coney's a sell. I mean, again, if you just want income for fun, maybe, but these are the unsustainable ones. The yield max ones, they have the return of capital, the net asset value erosion, and the high expense ratio. So you 1.22% expense ratio. So first off, this doesn't outperform the SPY's 8% CAGR, and you're already losing by 1.66%. So historically, your annual dividend income will go down by double digits every year, especially if they do return of capital. So you buy these to maximize your income. You shouldn't expect look at that decline. The market's at all-time highs. Let me actually, just for fun, we'll compare the charts. Versus overlay. We'll add this that sells covered calls on Coinbase. Okay, that ETF sells covered calls on Coinbase, and this is Coinbase stock versus Coinbase covered call ETF. Wow, that's since the inception of the ETF. So again, you're buying that to max your income. And I wouldn't really want to sell calls on Coinbase, which is Bitcoin, because statistically you're going to get called. But that's why the income is so high, because you're pretty much buying something where you're going to get called. Hey, Johnny, what up, dude? Hey, hope you're having a great day. And Azurite, thanks for the rose there. I do appreciate that. So here's Upstart. I believe this is that like car loan company. They do like car loans. And check this out. They've been really expanding their platform and referral fees. That's up 105% year over year. Nice growth. It's a record. It's never been over 200 mil before. That's good news. Interest income, servicing and other fees, that grew 18%. So like the growth is back. The orange lines what the analysts expected. Huge beat on revenue, beat on EPS. They're actually expected to lose net income, but they made net income this quarter. And EBITDA, wow. So super growthy, revenue's up 101. They even made net income on it. So as long as they keep that up, this looks great. But they are exposed to like auto loans, or I haven't done much on this company. Let's see. Credit services. So yeah, profit per employee. Okay. That growth was impressive. It really was. So Jacob said thoughts on ASTS. Yeah, hey, this is one of the space companies. So ASTS, wow, up 12% on the day. Any news today? ASTS launches 800 mil stock offer. Yeah, I bet they are. That's genius in them to beef up their balance sheet. But here's the thing. Here's why the next 6 months are extremely volatile for this company. Because if we look at their right now current revenue, it's nothing. It was $1 million this quarter, under $1 million last quarter. So it was $1 million this quarter. But guess what the analysts are expecting next quarter? 22 million. And then the quarter after that, 35 million. So be in for a ride the next 6 months as they really prove themselves. As they recognize these contracts. A lot of this is being priced into the stock, it already looks like today. So if there's any shady stuff on missing growth expectations, they might gap down. But I can see why they're at all-time highs. But congrats if you own them. I would be very careful. They're transitioning. They're about to prove themselves, though. So bottom line, expect a volatile 6 months for them. What is this site? Is this Robinhood? No, I do have Robinhood, though. I do love my Robinhood. Let me check how we're doing real quick. We're up 0.86% on the day. Constellation Energy is really in the lead today. But yeah, hey, if you want to get any of the apps I'm on, they're all in the link tree in my bio, the very first link there. These are brokerages where you buy stocks on. I have Webull as well. I have all of them linked in my bio. They're all affiliate links, by the way, full disclosure. So if you go up there and like if you sign up for this app and deposit $100, we'll both get some free stocks, which is kind of cool. Anyway, link tree in bio, very first link for this app. Let's see. Yeah, this is my favorite one, by the way, because lowest fee brokerage. I keep my idle cash in here. If you look at me on my screen, I got 1,100 of cash, earns you the interest. All right. So what is this one? Oh, wait, hold on. UCG says, yo, I know you love Dave. I bought some today. Oh, let's check it out. Yo, here's what I love about Dave's stock. Yeah, I wouldn't have this as a huge position. I think I have 4 shares of this stock. Check this out right here. Actually, I used to have 8 shares. I took all my, I actually accidentally sold 2 shares. I kid you not. My Wi-Fi glitched and it sold, or maybe I was just being dumb. But anyway, check out the growth here. This is why the stock deserves this crazy hype momentum, because of how well they're beating on expectations. They expected 113 mil, they reported 130. Like every quarter, huge, 25% beat on revenue. There was they didn't actually, you got to look at the diluted, they had a little one-time adjustment, but the huge beat on EBITDA, like everything here is headed in the right direction. This is the kind of growth stock I'd love to own, and I do own them. Full disclosure, check this out right here. Let me find my Dave position. I haven't looked at them in a while. Yeah, we got 4 shares of Dave. Yeah, look at this. I bought 7 shares at $78, and then I sold at $272. That was I guess I didn't mind selling it at $272 because it's $207 today, and I could buy back in lower. But I do love. We didn't even buy them that long ago. We bought them during the April dip. By the way, what day was this? Yeah, April 3rd is when we bought them, and they've just been up ever since. Again, they deserve. They're not just propped up on momentum like some of these stocks. They have real good growing fundamentals. Look, 131 mil of revenue. Out of this 131 mil of revenue, you should really look at the operating profit, because again, the net, they actually diluted GAAP net income was 30 mil. So you look at the operating profit. Profits have grown tremendously. And not just operating profit, but FCF, free cash flow, 66 mil of free cash flow, 30 mil in net income, deleveraging the balance sheet. Check that out. Their assets are growing, liabilities are staying the same. I really love Dave, and I might be biased because I own them. I don't love their current valuation as like I actually it's an all right valuation right here. If I wanted them as 5% of the portfolio, I definitely wouldn't make it 5% of the portfolio today at this valuation, but I'd probably make it 1% and then watch it fall 10 or 20% more and then make it more. And if it never falls 10 or 20%, then that's the thing. You shouldn't feel bad about that. Hey, trade, he said Opera. Hey, what is Quantum SI? Is that a stock or something? I don't know what that is. Yeah, if you guys got any stocks you want me to look at, let me know with the ticker symbol. We'll check it out here. Hey, what up, the EBB? What up, the game? What? Oh, yeah, we got to get to Tempest AI. So let's check this out right here. What do you do for? Oh, hey, what up, dude? Yeah, hey, I'm just a college student. What up, that man? By the way, I'm definitely not an expert. No, this is financial advice. I'm just a college student, and I sell nothing. I have no course, book, WhatsApp, nothing like that. So check this out right here. Thanks for everything on ASTS, GSU. Oh, maybe we'll get to that one. Oh, so here's SOPA. Look at the rally on this one. Wow. So there was some sort of news that happened in the past 5 days. Let's go see if we can figure out what happened. It went from basically 4x weekly brief. Strong Q2 25 results and Noosa trip successful. Okay, well, looks like there was good sentiment on earnings. So they're a digital marketing company. Yeah, so analysts expected 1.5 mil and they reported 2.5 mil. And they made net income? No way. So was that real? So they must have made interest or something, but they really basically did break even. They basically did make a small profit. I don't know how. They must have insane margins. Wow. So that's real. That's interesting. Maybe they deserve that rally if they can keep that up. They're really they really have to prove themselves. I mean, 2 mil of revenue. What's the market cap? Oh, wow. But the whole company's on there with 25 million. Online ticketing and reservation. Well, that online ticketing revenue just jumped up from 200 to 900K. Maybe that explains it. Yeah, because the digital marketing revenue fell by 10. So it's really their online ticketing business. Again, we're talking such small numbers here. 900K. So I would not even recommend or touch this stock just because the fact that the whole entire company is worth 25 mil, but they're interesting. I mean, they basically made money this quarter. So, howdy. Let's see. TEM. This is Tempest AI. You know who's buying Tempest AI? That would be Nancy Pelosi and her husband. And this stock is at all-time highs because they deserve to be. Check this out right here. They're a genomics company, and check out the growth. This is what justifies them being at all-time highs. The revenue's up 115%, easily to a new record. Crazy new record on that business. And also their data and services business is also really growthy, up 35 after going 32. So I think people are really starting to take Tempest AI serious. If you're wondering how did the revenue grow so much, that's actually partially inorganic from an acquisition, which is actually what I love about them. Last quarter, they bought a company for $400 million or $375 million. So that explains why the assets really bumped up last quarter by, basically $400 million. And the sales are jumping up too. So I do like them. I can see why they're at all-time highs. Probably a little too high of a valuation right now, but that's cool. ASTS, NNE, Plug Power. I've been seeing a lot of people talk about Plug Power, and they're interesting, but I wouldn't trust a lot of money with this stock. And just because of the fact that I don't like to touch companies that, first off, I believe, correct me if I'm wrong, this is an electric vehicle charging company. And, it's a commodity. People charging their cars with electricity. What's the real net margin they can make there? I don't know, like in the future. But for right now, here's the tough news. Here's like, forget that, for example. This is why I already wouldn't invest in them. I'd rather buy Tesla. Tesla is honestly the market leader for charging network, but they lost 200 mil this quarter, 200 mil last quarter, 1.3 billion the previous quarter. Like, they are burning through net income, and just for eternity, they just lose a couple hundred mil in net income a quarter. So we really, really, really want to see this company narrow their losses. Like, gross margins are negative. Well, of course they are, but you want to be so careful with that name. But the momentum's really been in their favor. Side Kai, what up, dude? Hey, watch out for that guy in chat there. Hold on here. Whoa, whoa, whoa. Hide. Yeah, there we go. There we go. Okay. Hey, what up, TJ? We are back again. Yes, sir. Hey, yes, sir. We stream every day if y'all want to hit the follow button. By the way, I sell nothing, no course, book. Oh, hey, Azurite, do you mean SFM or SRFM? SFM is one of the stocks I am down bad on. Actually, if you want to see my full analysis on this company, I literally made a YouTube video yesterday doing a full deep dive on this stock. So if you want to see my full thoughts on Sprouts Farmers Market, go check out the recent YouTube video I just made. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type in YouTube Nathan Robert. I'm also streaming on there. So if you missed anything, you can watch on the YouTube replay. Ahmed said, what app? Yeah, hey, if you want to get the app, it's in the link tree in my bio. But let's go analyze SFM Sprouts Farmers Market right here. This is a healthy grocery store, and again, I am down, 22% on my position. But check this out right here. Sprouts Farmers Market is one that I'm not just recommending them because they're way off all-time highs. I'm recommending them because they have good fundamentals. Very high margin grocery store for the industry, like abnormally high. So if we go to the revenue right here, this is what's impressive. The revenue is up 17, but the net income is up by 40. Thanks to that expansion. They sell more healthy oriented items, which is why I think they have so much pricing power. Again, they're beating on expectations every quarter, beat on net income, beat on EBITDA. So they don't pay a dividend. They have no net debt. They're trading at 21 PE, and they have bought back 25% of all the shares that exist since 2019. Pretty cool. Yeah, hey, Mark, if you want to get this platform I'm on or get this software I'm on, it's in the link tree in my bio, the first link there. MA said, can you look at PG stock, Procter Gamble? Yeah, this is a great staple company. So bought AMD at 117. Yo, side, heck yeah, brother. Oh, we'll look at Salesforce too. So here's Procter and Gamble. This is like a consumer staple company. They've had this. They're kind of like a Pepsi. The growth has slowed, but this is still one that's worth looking into. You love the dividend here. You get a near 3% dividend. They're actually a dividend aristocrat, which means they've been raising their dividend for over 25 years. Never had to cut their dividend once during 2020 or 2008 or any of that. They actually raised their dividend through that time. So you get the nice 3% yield. They traded a fair multiple, 23 times PE, which means 23 times net income. But the organic growth is slowing, and that's why investors aren't too happy. But I love how diversified the revenue streams are. Stuff everyone needs. They own like Tide, Gillette, Old Spice, a lot of random stuff you've heard of before, but like fabric, home care, baby, feminine products, beauty products, healthcare, grooming. So I love how diversified that they are, and they print money. I mean, pretty much $4 billion of after-tax net income a quarter, plus a 3% yield. But here's why the stock again is struggling the past year. We want to see the growth come back. The revenue is only up 1.7% year over year. 1.7% revenue growth doesn't exactly beat inflation. So that's one reason why they're struggling. But if they can bring that, they're kind of recession resilient. You get the nice yields. So yeah, Salesforce right here. This is one of the software names really being hurt by AI. The AI thesis is hurting them. If the white collar job market slows, that'll really hurt Salesforce. But first off, I love this company. What's their multiple? They're trading at 34 times net income. That's the fairest multiple I've seen on Salesforce in a long time. I love their assets. They own Slack, Agent Mule. Look how diversified their streams are. Service, sales, platform and other, integration analytics, marketing, commerce. Like let's just go to the annual revenue here on each one of these. Like the services revenues at a record, sales at a record, platform and other at a record. Like that's what's so cool. They acquire a bunch of companies as well, but check out the net income, expanding margins, 1.8 billion in net income a quarter. You get a dividend now, 0.7% dividend yield, but they're kind of like Adobe where the sentiment isn't in their favor right now with AI, and they could maybe trend down for a little while longer, but I think they're worth nibbling on. I wouldn't make it a full size position yet. I nibble on them because you should probably have the expectation for them to fall a little more. But if you still want exposure, just buy a little bit though. How to get this platform? Yeah, hey Ahmed, if you want to get this app, it's in the description on the YouTube stream. By the way, this is a brokerage. It's where you get stocks on, and I also have a YouTube video on how to use it and my favorite features. Also on my YouTube channel. But yeah, if you want to get this app, it's in the link tree in my bio, the first link there. So, in Trust, what up, dude? You said BBSI stock. Let's check it out. Oh, and remind me to look at SANM. Yeah, that's that Mexico semi play. So here is the Barrett Business Services. Stock is pretty much at an all-time high. So congrats if you own this one. They also pay a dividend, a near 1% dividend, super safe payout ratio. The PE, the PE, which is net income multiple. The PE is just net income multiple plus any dilution or buybacks. They're trading at 22. Professional employer services. That's nice growth. It's up 11% after 7, after 5. So the growth rate's growing. They're beating on expectations. That's the orange line. They're beating every quarter on revenue, net income, EBITDA. So they're just making a good. So this is a fintech right here. Yeah, I can see why they're at all-time highs, beating on those expectations. What was the stock? Oh yeah, MU stock. What up? So Micron right here, this one deserves to be at all-time highs. And if I owned Micron stock, would I trim or take profits on Micron? I would not, because I kind of think they might go higher. Not financial advice, but would I also on the other hand, would I buy at this price? No, I wouldn't buy, but I wouldn't trim out. Here's why. So they're trading at 25 times PE. Again, industry average is 47. You look at NVIDIA, Broadcom, Taiwan Semi, AMD. The multiples are insane, but this one trades at 25 PE, and that's their actual PE. That's not propped up on some one-time adjustment either. And they're just as growthy as the other names. Like the revenue's up 46 after it grew 93. So the growth is really good. And not just growth of the revenue, but the growth of net income. The net income grew 260% year over year to $3.2 billion. That's the highest net margin they've had. 29% net margin. It's never been so expanding margins. So I like Micron, and that's why I wouldn't trim out of them. I think the PE could maybe even go up to a 30 or higher before it really maxes out and gets too bubbly. But yeah, they're interesting. Congrats if you own them. You got to be doing great. Do you have Costco? I do not have Costco. Costco, I have Sprouts Farmers Market, but Costco is another. This one, I would love to own Costco, but the multiple is too expensive. Like they're really expensive. They trade at 50 times net income. So, but they have an incredible business model, incredible management. You have to pay for a subscription every month to get into their store, and whether you go there or not, they're still getting that monthly fee. Also, when you buy stuff there, you're buying stuff in bulk, so you feel like you get a good deal. They get you to buy more stuff with their loss leaders, like think of the $1.50 Costco hot dog and the $5 rotisserie chicken, whatever. They're making good money, 1 to 2.5 billion in net income a quarter, 0.5% dividend yield, but that multiple is too expensive. But they're a quality stock, great business model, phenomenal. People love going to Costco. It's like the new Target. All right, let's see. NVA, what up? Try not to spam there. Yeah, let's look at NVA. What is this? Nova Minerals. So, this probably is just another rare earth play, and a lot of the rare earth mineral plays are momentuming up, hoping for a government stake and opening for some partnerships. So yeah, this one, it doesn't have any revenue yet, so it's still they just own the mine. They don't have any revenue from it, but they have a phenomenal balance sheet. They have, $9 million of cash. The other part of their assets is how much the mine is worth, but no debt. Look at the liabilities. Pretty much no liabilities. Like, that's interesting. And what's the market cap? 150 mil market cap. So they're trading at a slight premium to their mine value. But interesting. They're hoping for a deal like Lithium America, like MP Materials. So yeah. Yo, what up? Stoyan said BBAI. BBAI. What? Oh yeah, Big Bear AI Holdings. I don't love this name. Let's see if there's any news surrounding this stock. Weekly. Big Bear AI proposes share authorization increase to 1 billion. They're buying back shares to 1 billion? Let me check their net income. So I don't know how they're buying back shares. So here's the one thing that the small red flag here, like revenue is down 18% year over year. So the revenue is down 18% year over year. And they lost 200 million in net income this quarter. So I don't love that. But I believe they did some sort of like data center deal in Southeast Asia. And that's one of the reasons they've been gapping up. Someone said, do you mentor? No. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. So please watch out for people impersonating me. If you follow me, I really appreciate that. I really do. But you might get followed by someone impersonating me. Just know that that's not me. And if you want to hit the follow button, we stream every single day, sometimes twice a day. Like yesterday, we did 2 3-hour streams yesterday, pretty much. But let's see here. REGCO. Oh yeah, we looked at that one earlier. I didn't. That's not like your typical stock. It's like, I don't even think that it's a stock. Yeah, it's a bond thing. It's like cumulative redemption series preferred shares. Like this is they're too confusing for me. So I don't know what that is. How do I use I don't have Coinbase. I don't know, but we can look at Coinbase stock if that's what you're wondering. What are your thoughts on Ford stock? Hey, what up, Big? So the thing is with Ford, if you're a ways away from retirement, you would not want to touch a stock like this. You know, Ford is the same price that it was, or it's actually no. Ford in the year 2000 was $24 a share. Now it's $11.70 a share. So the stock is basically cut in half since the year 2000. But you're basically buying this to maximize your income. You know, you get a 6% dividend yield. But again, you'd want to pick the S&P 500 over a name like this because it just doesn't outperform the S&P. But you get the nice yield. Oh yeah, when I signed up for this app, they gave me. Someone said, "What program is this?" Hey, by the way, this is a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link. This is the day I created this app. Or signed up for this app, and they gave me a bunch of free shares, and they gave me a free share of Ford, and I just instantly sold it. So yeah, if you sign up and deposit $100, we'll both get like a free share. It's an affiliate link, so help out the channel. Yeah, this is my favorite brokerage right here, link tree in bio, first link. Anyway, RBRK, is that, yeah, hey, Gary, you know what? They're actually on my hidden gem watch list right here. So this is a super growthy cybersecurity stock that just acquired another company. This is a growth beast, I kid you not. We go down here to the revenue. The revenue's up 51%. Last quarter it was up 48, 47, 42. Like every quarter, these are phenomenal growth rates. And one reason this just happened this quarter, so expected numbers to grow even more the next year. So, but they just bought a business for $735 million. This is their cash from investing activities. If this is negative, that means they bought an asset. If this was positive, that means they're actively selling their own assets. So you always want to see this usually negative for a company. Like Amazon and Google and Meta are spending like 10 to 20 billion a quarter on their cash from investing activities right now in AI. But yeah, I really like Rubrik. Great software play. They do lose net income. I love them for the growth. Revenue's up 51, but they still lose net income every quarter. But the losses are narrowing. That's what you want to see. If companies losing money, you want to make sure that the losses are narrowing, and it is. So that's cool. I don't know about its current valuation though. I wish other brokerages. Yo, me too, homie. Yo, I have. Actually, let me check my Robinhood. I have all these other brokerages. I got Robinhood and I got Webull. Oh wow, is the market just pumped up higher? No way, dude. AMD's up 11. Path is up 5. Robinhood's up 4. Super Micro's up 6. Yo, congrats if you own stocks. You know, you're probably that portfolio is up 2.6%. My main dividend only portfolio is up 1% on the day. And then our Moomoo account is up 2%. Yo, really thanks to Comfort Systems. Congrats if you own stocks. You know, you got to be up. Yo, remind me to look at ASTS Space Mobile. We want to get to that one. But I wanted to get to this one because we haven't really looked at them. This is SoFi Technologies. Oh, wait, closing cross. Market closes in 5 minutes. No, I didn't know. We've been streaming for a while. If you could get 5 stocks today, what would they be? Hey, you would love my most recent YouTube video because I just basically bought 3 stocks. Sprouts Farmers Market was one of them. Yeah, by the way, best way to support me is just subscribe to my YouTube channel. I just made a YouTube video. I don't get many views on it. I only get like 200-300 views a video. So best way to support me is just sub to my YouTube channel. I'm also streaming on there. I just switched to SoFi. Hey, homie, you're supporting the stock. Let's check this out right here. SoFi isn't just a stock at all-time highs from momentum. They are at all-time highs because of their real good growing fundamentals. If we go, this is a fintech right here. They have their own banking charter that they got through a loophole that's patched because of them now. This is their fintech services right here. This is the growth monster. No analyst expected this sort of growth. They expected like 50 growth each year, but not 100. Like revenue's up 105 after it grew 80, after it grew 222, after it grew 80. Like the growth doesn't stop here. So and again, we can see that by the analyst expectations. Analysts expected 804. They reported 858. Every quarter they're beating on revenue, beating on EPS, which is net income, and on EBITDA. So people are really starting to take SoFi serious. They made $100 million in net income this quarter. They're making net income every quarter. Revenue super growthy, so pretty cool. Oh yeah, I forgot to get to this one. This is your Mexico, like international chip play. They're super low margin. What's their net margin again? So yeah, well, not terrible, but 3% net margins. That means there's a lot of room for them to maybe expand net margins. But that's because if we go to where do they get their revenue from, it's Mexico, APAC, United States is only 18% of it. So it's kind of like an international chip play. And they make good money. Check out the net income. Like this is what's great. They're making 70 million in net income a quarter. Revenues up double digits. So, and I think they just had a huge deal with like AMD or something. The stocks rallied up the same day AMD did. What was the ticker for the cybersecurity one? Oh, hey, what up, Gregory? By the way, if you missed it, you can replay it on the stream, but on the YouTube stream. But yeah, I think, oh, wait. It was RBRK. That was RBRK. I think that was the one you were talking about, the Rubrik one. This is that stock that bought a company for 700 mil, and that's really growth. You know, revenue's up 52, but still losing 100 mil a quarter. What do you think of Vertiv and Broadcom these days? Hey, what up, Caleb? So yeah, Vertiv, this is an incredible growth company. Same with Broadcom. Both of those are great never sells, but both of them are kind of at too high of a valuation. Like they're both at all-time highs, so it's tough to buy them, but they deserve to be at all-time highs, both of them. Check this out. Here's Vertiv's revenue. Here's their product sales. That's up 39% year over year to a new record. And also their other businesses, their service and spares, is up 20% to a new record. So if we just go to their analyst expectations, every quarter they're beating like crazy. The orange line is what they expected, beat on revenue, beat on net income. So yeah, look at that net income growth. It's up 82% year over year, making a couple hundred mil a quarter. So no wonder they're at all-time highs. I can totally understand it. I should have bought them over Supermicro Computer, but Supermicro is also done pretty good. Oh, hey, Azurite, what up, dude? Do you still want me to look at ACM? Let me know. Or if you're still in here, I got you. I forgot to get to that one. I'm so sorry. We'll get to ACM if I see you. Let's see. I used to work at Rubrik, great company. Really? That's very cool. It was probably before their IPO, right? I've been looking at an AIPO ETF. AIPO ETF. Defiance and Power Infrastructure ETF. Well, let's check it out. Let's see what it owns. Let's also check its expense ratio. So a 0.69% expense ratio, a little high, but again, an ETF, it's just a basket of stocks. Let's see what it owns. So actually, this is pretty good. I like a lot of these. I love Eaton, GE Vernova, Vertiv, Cameco. That's the best uranium play out there. Ooh, and it has Constellation Energy. Hey, I love best nuclear stock of all time. They literally own 30% of all the U.S. nuclear reactors. Largest pure play. I really like a lot of their stocks. Eaton's a good switchgear play, like Powell Industries. You know, I really think Eaton should acquire Powell Industries. Might happen one day. Yeah, SAM had a deal with AMD. That's why they went up. Oh, hey, that's really cool, UZG. That should be great future sentiment. What's a good entry price for United Rentals? Yo, GSK. I think United Rentals is near $1,000 a share now. I can't believe it. This is one of I never talk about it because it's such a boring like stock that no one probably cares about. But United Rentals is just a boring dividend growth company. You know, it's up 432% the past 5 years. I'm up 60%. I'm super happy with my 60%. Great dividend growth company. I can show you my, look at that. We get an $8.95. Let me actually go to the, pull this up right here. Dividends. We've gotten 2 dividends from them so far. Anyway, I love United Rentals, but you know, under $900 is when you want to consider them. They're a share buyback monster and dividend growth beast. ACM, let's do it. ACM. This is AECOM Technology. Whoa, hey, congrats if you own this one. Yeah, hey, I agree, Top. Boring is where it's at. You know, the boring stocks always do really good, you know. like surprisingly good, like AutoZone, for example, McDonald's, or anyway. Here's AECom Technology. They're at an all-time high right now. They're a $17 billion company, or even like boring Walmart, boring Costco. They do incredible. But let's go check out what this stock does. So Americas and international, but what's the sector? So engineering and construction. Industry chain is air pollution control. Now that sounds interesting. All right, that sounds niche. Let's see how their revenue is growing. So the revenue is only up 0.65% year over year. The net income grew 5%, so they were able to expand margins. They're making good net income, 150 to 200 million net income a quarter. But they have been missing on expectations, but the stock doesn't care. Stock's at all-time highs, and nonetheless, there must maybe be some sort of good news, good sentiment for this company. I would. This is why I wouldn't buy it right now. If you're looking into buying this one, I wouldn't buy it at this price, just because I'd watch out for the fact that they've been missing on revenue. The revenue is only up 0.65%, doesn't beat inflation, but net income is a phenomenal. They've deleveraged their balance sheet. But congrats if you own that one. You got to be doing great. Oh, someone, TTWO, and Google. Hey, remind me to look at Google. We got to get to them. PayPal and Amazon. Hey, what up, Samir? Yo. Ooh, PayPal and Amazon. Those are good. Remind me to look at that one too. But, so, hey, what up, Logan? Taiwan Semi. Yeah, Taiwan Semi is a great one. I would completely stay away from Texas Instrument. You know what? I might go over Texas Instruments and show you why I'd stay away. Too high of a dividend payout ratio. Eats up all their net income. Texas Instruments pretty much makes no net income, even because of their dividend. Anyway, this is a cool gaming company. This is Take-Two Interactive. So if you've heard of Rockstar Games, which owns GTA 5 and Red Dead Redemption, this is the stock that owns that. And they're in a unique position right now where they have this asset, GTA 6, this game that's about to be released. And as soon as they release this game, it's going to make them billions of revenue. So basically, they're rallying up right now because of the future expectation very soon to pretty much bring in billions of revenue. So there's a lot of future growth happening, but for the most part, I think it's priced in. I think every investor knows GTA 6 is coming soon. So that's why I don't think their risk to reward is honestly worth it anymore to buy the stock after it's at all-time highs right now. But you're right, UZG. It could be maybe buy the rumor, sell the news. As soon as the GTA 6 exact day gets released, surprise day, maybe the stock will tank or something, because investors already know all this. But they're a cool gaming company, very cool. So let me look at here. If you're looking for a chip play, a semiconductor play, here's the one reason why I wouldn't buy Texas Instruments. They've also been flat since 2021. They've been actually, I think, the worst performing semi play pretty much. It's done nothing in 4 years. But here's the reason why. If we go to their net income right here, they made $1.3 billion in net income. Here's what I mean when I say they made $1.3 billion in net income, but they actually lost money. Here's what I mean. It's because of their dividend, surprise, but check this out. Remember this number. They made $1.3 billion, and the dividend cost exactly $1.24 billion in net income a quarter. So if they don't make at least $1.24 billion, they're losing money. And last quarter in net income, they didn't make $1.24 billion. The quarter before, they didn't make $1.24 billion. So literally, they're only retaining like $50 million. They only retained $50 million from this $1.3 billion in net income because of the dividend. Their dividend is suffocating them because they don't have any leftover money to play around with. So if they see an opportunity, they're like, oh my gosh, there's an opportunity. They would have to either dilute you as a shareholder or issue shares to get that, which just wouldn't be great. Margins are falling on them. So that's the one reason I stay away from Texas Instruments. But Taiwan Semi, on the other hand, now this is a stock that I would rather, I kid you not, I'd rather buy Taiwan Semi at all-time highs than Texas Instrument at that 4-year low, because this is a company that deserves to be at all-time highs. Like this one has real growth. And it has a good dividend too. The other one had a 3% yield. A 1% yield is still worth it. They make up for it in stock price appreciation, but you get a 1% dividend yield. And check this out. Their market share keeps expanding. Those like 3 nanometer wafer chips went from 61% market share to a 67% market share. But the main winner here is the margin expansion. Check this out. First off, this is insane. Like the lifeblood of the company, the revenue, this is insane growth. The revenue's up 55 after it grew 33, but the revenue's up 55% year over year, and the net income is up by 79. That means they're expanding margins, 42% net margin. So if you go spend $100 at this company, $42 of it is after-tax net income for them. And then they're making over $10 billion in net income a quarter, $13 billion this quarter, and that's not some one-time adjustment. That's real profits. It's unbelievable. If you didn't know, NVIDIA just designs the chips. Taiwan Semi actually makes them. So, ARM's another one I love. Let me actually remind me to look at ARM. I want to get to Google right here because I saw someone saying that a while ago and I never got to it. I'm so sorry. We haven't looked at Google today. We also haven't looked at Rich Tech Robotics. I don't have much good stuff to say about Rich Tech Robotics, sadly, because they're revenue-less startup with no IP or patents or anything. Not a great robotics play, but a nice momentum play. Rich Tech Robotics is a huge momentum stock that a lot of retail investors like, but not good fundamentally. But here's Google right here, a great never sell stock right here. So for Tech Robotics, that's funny. But yeah, the Google multiple is still fair. I mean, they trade at 26 PE. I mean, that means they're trading at 26 times net income. That's fair. This is an ETF in one. They own Android, YouTube. They have the Google Cloud. The Google Cloud growth is insane. It's being a bigger and bigger portion of the business. The Google Cloud actually just took 1% market share away from AWS, which is pretty cool. They also own Waymo. They're in quantum. They're the best quantum play. Like, look at the expectations of the revenue. It's supposed to be $108 billion in 2 quarters. Like, the EPS is projected to just keep on going higher. Like, they literally already make over $100 billion of after-tax net income a quarter. And it's expected to keep on going higher. Originally, people thought, back here when the stock at 150, people thought Google was an AI loser. But nah, man, Google's an AI winner, especially with the DOJ monopoly case. As soon as that was gone, as they was finalized, they didn't have to sell off Chrome. The stock rocketed like 10% the following day and a half. So if you're wondering what is Google doing with basically $25 billion in net income a quarter, well, this is why the stock doesn't go down. They spend $15 billion a quarter solely buying back their own shares. So they spend $5 billion a month on share buybacks. Here's what that does for you. Net income is up by 19, but net income per share is up by 22.2. That's because the share part of the ratio went down. The EPS growth rate and the net income growth rate should always be the exact same. It's just net income per share. The only thing that changes is if the share count goes up or down. The share count goes down, then the EPS goes up more than the net income growth rate. Gives you more ownership in the company. When a company buybacks their own shares, it literally gives you more ownership, makes the EPS go up, and it makes the PE ratio go down. It is amazing for the company. It's amazing for you. It's basically a non-cash dividend. Pretty cool. I specifically go out of my way to look for companies that do share buybacks, and a lot of them. Okay, which app are you using? Yo, what up, Maloom? Yeah, hey, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. I love them. Yeah, also Waymo for Google. Yeah, I totally agree. Let me get back to ARM right here. ARM, that's a stock also that NVIDIA owns. NVIDIA owns a stake in OpenAI. OpenAI has a stake in AMD. So to an extent, NVIDIA has a stake in AMD. NVIDIA also just took a stake in XAI. Did y'all see that news? But anyways, going back to the NVIDIA portfolio, I love ARM. This is actually, if y'all don't know, ARM is actually a royalty company, an insane high margin royalty company. If we go to the gross margins right here, 97% gross margins, like better than Reddit type margins. But here's the thing. If we go to the revenue, 70% of the revenue is their royalty revenue. Again, super high margin. And then they have the licensing revenue, 2 super high margin businesses. They're making good net income every quarter. Net income did fall year over year, but they make those energy efficient chips. I love ARM. They're on my watches, but only thing that scares me is the expensive multiple. Oh, hey, Samir, thank you for that right there. He said PayPal and Amazon reminder. We'll cover PayPal. I feel bad if you own PayPal. Like, PayPal is the same price that it was back in 2017. PayPal stock looks exactly like DocuSigns. It looks exactly like Zoom's, Pelotons, where they all rallied in 2021 and are just down like 80% sales. Like, same with Okta. Oh, I wanted to look at Okta earlier. I wonder if that person who commented that is still here. But anyway, PayPal trades at 16 times net income. That's like a commodity multiple where they're not really expected to create or lose you any value. But because the growth isn't too there. I mean, the revenue's up 5% from the previous year. That just barely beats inflation. 5% revenue growth. The quarter before, it was only up 1.1%. So we do want to kind of see the revenue come back. But here's the genius thing that PayPal is doing right now. Since they're making over $1 billion in net income, the quarter, they're retaining it. They have no dividend to pay or anything. They're deploying it all on share buybacks. Look at the top here. They're literally spending over $1 billion every quarter solely buying back their own shares. Tying it back to what I was saying earlier about the share buybacks, check this out. The net income is up by 11.8. Net income's up by 11.8, but net income per share is up by 19.5 because they bought back 7.5% of all the shares. I kid you not. If they spent all that money on dividends, you would have gotten a 7.5% instant return via dividends, but instead they chose to do it in share buybacks, which I love. They also, one thing, honestly, I kind of wish they did, instead of doing so much share buybacks, buy a company, do some M&A, try and bring the growth back to the revenue, 5% revenue growth. And if they believe the growth story, the stock will trade at a higher multiple. Siak said, is this actually live? Yeah, maybe I sound like AI, but yeah, this is live. What up? You can see the time in the top left, and you can see, like we were just on Google stock or whatever, you can see the stock versus, you can just check the price. Anyway. What do you think of Rolls-Royce? Yeah, hey, Rolls-Royce, RYCEY. This is, yeah, a lot of people know Rolls-Royce for the cars, the fancy cars, but I think that's actually not part of this company. This is their aerospace and defense business. They make jet plane engines. Check this out right here. 47%, or pretty much half the business, is just their aerospace business, which the aerospace and defense industry trades at really high multiples and is booming right now. Yeah, 24%. Their next biggest segment is their defense business. And they're not just crazy revenue, but crazy net income. They're a European company. Actually, let me double check. No, you're right, UK company, so British pound. So they report in halves. So that's why it says 2025 first half. But the growth rate from the previous first half of last year is insane. $6 billion in net income, of after-tax net income so far this year. Wow. And you get a dividend, I think, with them. All right, we'll look at a few more stocks here. Question mark said, holding AMD is finally paying it off. Yo, for real, they're no longer advanced money destroyer. We're up $300 today. Let's go from AMD. We down on anything? Reddit was down, but a rising AMD heals all wounds. Wow, we're up almost a double on them. That's crazy. 91%. All right, we'll get to a couple more stocks, and then I got to go. Hey, we got to cover IBM. Yo, Jeremy, hope you're having a great day, my friend. Yeah, IBM, this one's also near all-time highs. And even though the stock is at all-time highs right now, first off, if you own IBM, you got to be the happiest shareholder ever, because not only have you gotten this monstrous stock price appreciation, like not only have you gotten like 10 to 15% of your money back every year in stock price appreciation, but also every year you've gotten 2.3% of your money back in a dividend. Now, if you look to the right of this, it says the payout ratio for the last full year was 103%. That's actually not true. Check this. It says 103%. They actually had a little one-time adjustment. If we go to their net income, you see how it says 2023 Q4, they lost $330 million. They didn't actually lose $330 million. You look at the operating profit, they really made $2 billion. So they just had a little one-time adjustment. So don't worry about that. That's also making their PE ratio look artificially high. They're really trading at like probably 30 times PE. But I love how diversified that they are. They have three main segments: software, consulting, and infrastructure. So yeah. They're a bit of a slow grower though. Actually, wow. Someone said I sold my IBM. Hey, what up, Todd? Good to see you, man. Your other stocks I know are doing great though. But yeah, I can honestly see why maybe people were selling out of IBM. Look at this. Before today, the revenue was up 7% this quarter, but look at before today. You were looking at a company that wasn't even beating inflation in terms of revenue growth. It was up 0.5. It was up 1, 1.5, 1.9, 1. Like 1% growth the whole year. Doesn't beat inflation, but it looks like the growth is finally back, and the profits are back too. Again, they didn't lose net income that one quarter. Whenever they lose, that's net income per share, so it makes the multiple look weird. Anyway, nice yield on that one. Looks like the growth is finally back, or the sentiment's back. I am new to the market. Drone Shield. Hey, DRO stock. I don't think I can view DRO. Oh, I can. So this is you're right. This is an Australian company. So it's not even available on this brokerage for me to buy this. But Let's check it out. What's the multiple? Or a $5.7 billion market cap. That's a good market cap. 5.7 billion. Let's see the business. Development and commercialization of hardware and software technology for drone detection. Yeah, and look at the growth. I mean, from 2020, it was 2020, 5 mil of revenue. 2024, 57 mil of revenue. No analysts cover it, but looks like, wow, that's a great growth rate. And this is a phenomenal balance sheet. They have no debt at all, it looks like. I can totally understand why people are liking this one because, it's not just your average momentum stock. Like, they have good growing fundamentals that justify. There's a lot of stocks that are momentuming higher that I think that are at rallying unjustifiable. Hey, what up, Aaron? It's a FLXS. Let's do it. Flex Steel Industries. Let's see. So actually, wow, this looks really cyclical. The stock is the same price that it was back in 2015. So if you bought the stock a decade ago, it's the same price. But they've had a nice recovery the past couple months here from this $29 low. Let me see what they do. Furniture products. Whoa. So you know what? A lot of people are betting on furniture as we go into a lower interest rate environment. I actually have a phenomenal furniture stock for you. I forget the name. Ethan Allen. I've looked at all the furniture stocks out there. What's that one called? Restoration Hardware. This is the best way, I think, to get exposure to furniture that has the best fundamentals. You get a 5.5% dividend yield with this company. Again, I don't really expect this to outperform them in the long run, but I think these are really rallying on the lower interest rate environment hype. Yeah, this one's sales are up 3% year over year. So hopefully you can maybe, and look, market cap only $700 million. It's only a $700 million company, but again, they're profitable, but they're still seeing that decline in net income like the whole industry is. Revenue's down 5%, but stock has done great. Let's see. This one is also just making a couple million net income a quarter. So they have a dividend though, and you get a 1.6% dividend. They're both interesting. Anyway, those are very interest rate sensitive plays. I don't know if I'd want to be in a furniture stock long term. Like we see how they did. They're the same prices they were back in 2015. Same with like Whirlpool stock. A lot of these kind of home stocks don't do great. I'm thinking about going 100% VU. I have 15 years into retirement. Jerome, that might be the best decision you do. It'll save you headaches. Like most retail investors can't outperform the S&P 500. And I always recommend if you're like me, you want to still try and beat it. Make the S&P 500 the backbone of your portfolio. Make this most of your portfolio. Then play around with some individual stocks. Then play around with maybe some S&P 500 companies. Like maybe if you like Google, Meta, Amazon, McDonald's, buy those individually, but have the backbone of your portfolio in VOO. And then you can just like buy VOO and chill. And then just like, you never have to worry about anything ever again. So yeah. My average cost on IBM is $150. Oh, nice. Check ASTS. Oh, yeah. So here's the thing about ASTS Space Mobile. If you're wondering why all the hype around them, it's because of what analysts are expecting in 2 quarters. So if we go to right now, the revenue is dog. It's not good. It's $1 million this quarter. But look at what analysts are expecting. Next quarter, they're expecting 22 mil. Then the next quarter, 35 mil. So that's some pretty insane growth. But anyway, wasn't furniture tariffed? Probably. Maybe that's why Ethan Allen isn't falling as much as the other furniture stocks. I think they produce in the U.S. and they don't get tariffed. Like actually, Ethan Allen has a surprisingly good like chart for like a furniture stock. Plus paying this is on the 5% dividend, and they're again not something I really expect to outperform in the longer. But anyway, guys, I'm so sorry. I gotta go. Someone said VOO. Yeah, here's what the VOO is, by the way. It's just the S&P 500. It owns the top S&P, or basically copies the S&P 500, but it's the top 500 companies in the U.S. by market cap. So NVIDIA is the largest, then Microsoft, then Apple, Amazon, Meta, Broadcom, Google, Berkshire Hathaway. Like all stocks, if you don't own the VOO, you should own these individually or something. Like I own Meta, I own Amazon, I own Google. So I own Constellation Energy, McDonald's. I own a lot of S&P 500 companies. So anyway, is Meta a buy right now? If you have the intention like me to never sell Meta, they're worth buying even right now because this is an $800 stock in my opinion. So Not financial advice. I mean, and Meta is crazy. If we go down here, their active users, Meta literally has 3.48 billion daily active users. They print net income, 18 to 20 billion net income a quarter, expanding margins, and you get a yield. They're investing in AI. They just bought 15 billion of Scale AI. You also see the new Meta Ray-Ban glasses. Those seem pretty cool. Like with the wrist, you can like control it, scroll through Instagram apps. So yeah. What app is this? Oh, hey, what up, user LO? Yeah, if you want to get the software I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. It's a brokerage. So, yeah, that was the stream. Oh, yeah, you can check out like, all the super investors. Like, if you wanted, you could track the Nancy Pelosi portfolio. These are super investors. They got to make all their trades public by SEC law. And, they also follow, they also own the top Mag 7 companies. Nancy Pelosi owns Apple, Amazon, Google. Her largest holding is Apple. If you go to Warren Buffett, his largest holding is Apple. If we go to Donald Trump, his largest holding is his company, but second one is Apple. Soros. So like, there's a reason. He has Nvidia, but like you got to own the Mag 7 or at least the S&P 500. So, did you drop your video? Yeah. Hey, yesterday I did drop the video. What happens is, yeah, hey, TP, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. And here's another cool feature. Actually, let me go to the investing themes real quick. So, hey, basically the stream's over. We're not going to be looking at any more stocks, but I'll share with you this real quick. If we go to stocks up here, I'll show you the interest rate cut probability. Oh, yeah, but if you're looking for any like certain themes, there's so many ways to find new stocks in here. Like if there's certain like weight loss drugs, gene editing, AI stocks, data storage, safe haven assets, rare earth minerals. They have so many different Red Sea shipping stocks. There's so many cool sectors that you can look at here, discover new companies, and then go analyze their financials. That's what I love doing, like going and seeing what ETFs hold what the managements of all these different people are doing. And then also we can see the interest rate cut probability. So on October 29th, there's a 93% chance of another 25 basis point cut. On December 10th, there's a 77% of another 50 basis point cut. So there's a clear interest rate cut path right now. And I worded that weird, but yeah, Nathan, AMD done made people millionaires today. I know, bro. No one can ever say AMD is advanced money destroyer. Advanced money duplicator now. So anyway, hope you guys have a great rest of your day. I will see you later. If you want to hit the follow button, we stream every single day. And someone said, when do you drop the video? Hey, great question. I actually dropped it yesterday. If you want to see my top 3 picks right now, if you look at the QQQ, here's what I go over the entire video. Here's the whole pitch. We look at the market right now. The QQQ is at an all-time high right now. Insane new all-time high. It doesn't feel good buying this psychologically. So we actually recommend in that video, I go over and I own all 3 of the stocks that I go over, and I'll show you how much I'm down on all them. But I go over 3 stocks that aren't at all-time highs. Here, I'll share with you one of them. Spoiler alert. One of the stocks we go over is Sprouts Farmers Market on there. And I'm not just promoting Sprouts Farmers Market because they're off all-time highs. I'm promoting them because they have good growing fundamentals. What's it called? Oh, yeah, my YouTube channel is called Nathan Robert. Thank you. Yeah, my YouTube channel is called Nathan Robert. You can just type that into YouTube. But it's also in the link tree in my bio if you wanted to do that. But yeah, just type into YouTube Nathan Robert. I'm also streaming on there, so if you missed anything or wanted to replay the stream from the beginning, a lot of people like to do that and leave a comment for a stock to me to watch the next time or analyze the next time. I do that too. By the way, I sell nothing. I have no course book, WhatsApp, Telegram. Watch out for people impersonating me. I'll never follow you. I'll never DM you. Or not in a mean way, but you know what I mean. I'll never follow you. But anyway, we stream every day this exact same time, and sometimes twice a day. We might do one later tonight, but see you very soon. Again, number one way to support me is just sub to my YouTube channel. Try to build it up. Boom. Hey, see you later, Jack. Beat this. Oh, GigaCloud Technologies. That one has some cool growth. I bought some Marathon Petroleum. Oh, hey, I heard about that stock. I couldn't find it. I don't know if the ticker symbol is MPC. I looked up MPC earlier and it like didn't show it. It was like Pete or something, or maybe I'm just slow. But yeah, see you later, question mark. See you later, RG. Yo, RG, I didn't even see that. What's up, man? Hope you're having a great day, RG. And hey, shout out to Looney, the member. Shout out to Homeo7.